Welcome to this free course on becoming a financial modeler. At the end of this course, you'll know how to value any company. This course is for anyone who wants to become a financial analyst with zero experience, a business owner who wants to value their own business, or an investor who wants to learn how to do their own fundamental analysis of companies they invest in. I don't want to waste your time, so let's get straight into it. If you want to skip the intro, then click ahead to the chapter where you want to start. Let me spend a little time discussing the structure of this course so that you can navigate to where you want to start. The first part will be for someone who has not spent too much time on Excel. I'll go over the very basics you need to know in Excel. Next will be financial modeling best practices, and then we'll go over a refresher on financial statements. In the next step after that, we'll build a 3-statement financial model from scratch by making a monthly financial projection given assumptions and historical financial statements for a case study. We'll get into valuing a company and build the discounted cash flow model, otherwise known as DCF. Let's get started with basics of Excel. In this section, we're going to talk about the elementary basics of Excel that you need to know first for first-time Excel users. When you open an Excel sheet, at the bottom you see these little bookmarks. These are called sheets. You can link different sheets together. This file is called a workbook. To create a new sheet, you can click on the plus button here. To rename, you can right-click on the sheet and choose Rename. Or if you're using Windows, you can use the keyboard shortcut Alt-O-H-R. And once you rename it, just press Enter. The top here where it has File, Home, Insert, Draw, etc., these are called ribbons. Just below the ribbon where you see FX, which is Function, this is the formula bar where you can see what's entered in each cell. To type in a cell, you can click on the cell and start typing, or you can start typing in the formula bar. And once you type the formula or text or number, then you can press Enter. Let's do a quick navigation of the ribbons. You can play around with them one by one to see what they do. I'll just go over the most commonly used tools under each ribbon. Under the Home ribbon, you have the most used tools like copying and pasting functions, the font formatting, aligning the cells to the top, middle, or bottom, or left, center, or right justification. If you have a column with a text description and you want it to all fit in the cell, you can click on this Wrap Text. If you have multiple cells that you want to merge, you can click on Merge. If you want to format a number, then you can do that with this drop-down, or you can click on Custom. We'll get into custom formatting numbers later. Under the Insert ribbon, the most commonly used tools here are pivot tables, which we'll look at more later, and inserting charts in the form of bar graphs or line graphs and spark lines. The Draw ribbon isn't used very much, but if you want to make a custom drawing with your mouse or touchpad, you can do that here. For example, maybe you're creating invoices and you want to insert a signature. Under Page Layout, the most common tools are creating the dimensions of the page if you want to print out your workbook. For example, maybe you have a one-pager dashboard and you want to be able to print this out for your team for your weekly meetings. And another common tool in this ribbon is if you want to see the grid lines or not. You can check the grid line box on or off. Or if you're using Windows, the keyboard shortcut is Alt-WVG. Under the Formulas ribbon, the commonly used tools are Trace Precedence and Trace Dependence to trace where the formula is coming from. This is really useful. Next, under the Data ribbon, the most used tools are the Group and Ungroup tool. You can group columns or rows to simplify the model, and it will create the plus sign. And if you want to get rid of that, you can ungroup it and go back to what it was before. If you have Windows, keyboard shortcut to group columns or rows is Alt-A-G-G, and to ungroup, it's Alt-A-U-U. A couple of other tools that are useful are this text to columns, which you can use to sort data to find unique values, or this what if analysis, which basically is goal seek to find the input when you have a certain goal for an output. Under Review, the most commonly used tools are New Comment and New Notes. It's a good habit to leave a lot of comments when you're building a financial model with a lot of assumptions. If you have Windows, the keyboard shortcut to insert a new comment is Alt-RC. And to insert a new note instead of a comment, it's Alt-RTN. And if you want to edit an existing note, then you can use the shortcut Alt-RTE. The difference between a comment and a note is that a note will have this little red triangle at the top right of the cell. And when you see them scattered around the model, then you can see what the note is by hovering your mouse over it. For a comment, you get this little purple marking at the top right instead of a red triangle, and you can navigate from comment to comment with the next comment or previous comment button in the ribbon here. The comments are used to communicate with contributors of the model, whereas notes are what you leave as reminders and assumptions that don't necessarily need to be addressed. And finally, under View, the commonly used tools are the freeze panes. Highlight the cell you want to freeze the panes above and to the left. For example, click Freeze Panes, then the worksheet will freeze up to row 2 and up to column B. You can click Unfreeze Panes anytime to remove it. To freeze and unfreeze panes, on Windows, the shortcut is Alt-WFF for both freeze and for unfreeze. Now that we've briefly introduced the ribbons, let's talk about other basics of using Excel. To start a formula or a function, you can start with an equal sign or a plus sign in any cell. So for example, you can do equals 2 plus 2, or if you have cells with numbers in A2 or A3, then in the solution cell you can type equals A2 plus A3 or plus A2 plus A3. If you want to change the formula in the beginning or in the middle, then you can double-click on the cell or double-click in the formula bar while the cell is highlighted, or you can simply go to the cell you want to change and type F2. If typing F2 doesn't open the formula bar in the cell, then that means your FN button is probably locked. Since each computer or laptop is different in how you can lock and unlock the FN button, do a simple Google on how you can change this setting on your specific computer. And to get out of the typing mode from a cell, press the ESC escape button on the top left of your keyboard. You can resize the columns and rows by putting your mouse in between the letters or numbers, and when the mouse icon changes to a plus sign, you can click and then drag to resize. To copy a cell and paste it to a different cell, highlight the cell you want to copy. Right-click and select Copy, and then go to the cell you want to paste it to, and right-click again and select Paste. Or if you have Windows, type Ctrl and C to copy, and then go to the cell you want to paste it into, and type Ctrl V. You can also copy and paste the entire row or column by clicking on the column letter or row number and applying the same thing, which is either right-click and select Copy or type Ctrl C. If you want to copy and insert that entire column or row into just before an existing column or row, then copy that whole column or row, then go to the row or the column that you want this to be copied into just before, right-click and select Insert Copied Cells. That way you don't overwrite the existing row or column, but instead you add the entire row or column right before the row or column you're pasting it into. You can copy and paste just the format or just the values or just the column width and more options. For this, copy the cell you want to copy in the same way, where you click Ctrl C or right-click and choose Copy. Let's say you want to copy just the formatting in cell C3 and apply the same formatting to cell C5. After you copy C3, right-click on cell C5 and select Paste Special and Paste Special again. There you can choose formatting. Or instead of right-clicking on Paste Special, you can type in Ctrl-Shift-V at the same time, and this box will pop up where you can click on just formatting. Another way to copy and paste in the same row or in the same column is by clicking on the bottom right little dot of the cell, just clicking down and dragging it to where you want to paste it to. This is useful if you're copying and pasting the formula to multiple cells in a row. And another way to copy and paste into multiple cells in the same row or same column is by highlighting more than one cell while holding down Shift. For example, let's say you want to copy cell C3 and paste it into cells D4 to D10. Go to cell D4, hold down Shift, and press the bottom arrow to highlight cells D4 to D10. Then Ctrl-V to paste, or Ctrl-Shift-V to paste special and only paste the value. With the Shift and arrow button on your keyboard, you can highlight more than one cell in the same row or column. Let's say you want to do this, but there are 20 or 30 cells that you want to highlight. If you don't want to hold down the arrow button one by one, what you can do is, from the start of the row or the column, hold down Ctrl-Shift and the arrow button to the end of that same row or column that you want to highlight. For example, here, I want to go from left to right, so I'm going to start with the left cell, hold down Ctrl-Shift, and press the right arrow. So highlight B10, hold down Ctrl-Shift and the right arrow to highlight all from B10 to L10. Notice that it will highlight until the last cell that has a value in it. Sometimes you may have blanks in between. You can see what happens when there's a blank. For example, there are values in B10 to F10, then there are blanks, and then there's a number again in L10. Start with highlighting B10, hold down Ctrl-Shift and the right arrow. Notice that it highlights until the last cell that has a value, which is F10. Then, while holding the keys Ctrl and Shift down still, press the right arrow again, then it will continue to highlight until the end of the number, which is L10. Now let's talk about number formatting. There are many different formats for numbers depending on what you're creating, but let's go over the most commonly used ones in a financial model. Let's say we have this table of data that shows revenue that the company generated from January to December. First, put at the top left what the unit is. If the unit is in dollars, then put in a dollar sign. You want to format these numbers so that they have a comma every 3 digits. To do that, you can click on the comma under the home ribbon. But then what happens is you get 2 decimal places, and let's say you want to show it to just ones. Then click on this right arrow decimal button under the same home ribbon to reduce the decimal places to none. If the table that you're creating doesn't have a whole lot of numbers, then you can use the dollar sign in front of all of the numbers. But with a financial model, it gets really cumbersome and unnecessary to show the dollar sign in front of every number in every cell. And that's why it's important to put the unit of the numbers in the top left of any table, especially for a P&L or any financial projection. That way you can just put it there and all of the numbers in the financial model or the table doesn't need to show the dollar sign. Let's say now that the company's revenue streams are in millions. So let's change these cells from January to December to these arbitrary numbers in millions. As you can see, it's really hard to tell what the numbers tell us and the patterns because there are too many digits. And when you're dealing in millions, you don't need to know the numbers down to the ones. So we're going to format these numbers so they're in millions. Let's put dollars in millions at the top left of the table. Then let's highlight these numbers with Ctrl, Shift, and the right arrow. And then under the home ribbon, click on the drop-down where it shows the type of number format and select More Number Formats. Under the Number tab, click on Custom. Here, we have the freedom to give a number any format. But let's say we want the numbers to have a comma every 3 digits, and we want the numbers to be in millions with 1 decimal place. To do that, you type in number sign, comma, number sign, to denote that you want a comma every 3 digits, and then 0.0 to show that you want 1 decimal place, and put 2 commas. Each comma basically is every thousands or every 3 digits that you're hiding from showing in the cell. And since we want to show the numbers in millions, we want to hide 6 digits. So 3 digits for 1 comma, another 3 digits for 1 comma, and therefore we put 2 commas here. Then what I also like to do is put an underscore and close parenthesis to add a space after the last digit so that the last digit doesn't touch the grid line. Now that was for positive numbers. We have to show the same format for negative numbers, which is the next set. So to show the next set, type semicolon, and we'll do the same thing, but we'll put parentheses around what we put for the positive numbers to denote negative numbers. Then the next set after a semicolon is for what happens when there's a 0 value. And for this, we want to just put a dash wherever there's a 0 value. So we can put dash and then again an underscore and a bracket so that the dash doesn't touch the grid line. Another number formatting I want to briefly go over is the date. If you're working with just years, it's best to go with a general number format so there aren't any commas. If you're working with dates and have a lot of dates showing on the worksheet, you want it to be simple, so perhaps just 2 digits for month, 2 digits for day, and 2 digits for year. You can highlight those cells that you want to format, and under the same home ribbon, select More Number Format, go to Date, and select the one that you want. Now you try this before I show you. If you want the numbers to be in thousands, what would you change from the custom format we just created? Pause and think about it. If you answered that you would get rid of the commas, then you are correct. And do this for both the positive and negative numbers. Next, to align the table so that the heading text is in the middle, let's click on this middle align button with lines in the center, and for numbers we can let them be the way they are. And for the left column text, we can have them aligned to the left. And to finish off formatting the table, let's do a few things. We can highlight the heading and change the background color with this paint can button to black, let's say, and select white font. And to delineate this table, we can highlight the whole table and click on the drop-down for this line button and select the outside border. Next, let's go over the basics of a formula or a function. A function is used to do a lot of things, including mathematical calculations. So for example, let's say we want to find the total of the revenue by month. We would go to the cell we want to calculate this, enter equals or a plus sign, and click on the cell that you want to add up. Then type plus sign, then click on the next cell reference, etc. This is just to illustrate how to enter a formula in Excel. Of course, there are easier functions to sum all of these together with one formula, rather than clicking on each cell one by one, which we will learn about in the next section. Let's now do a practice question. Before we get to that, a quick tip on whether you should create a model or table from left to right or top down. The rule of thumb is, if you're creating a financial model, the years or months will go from left to right. But let's say you're not creating a financial model and you're building an ad hoc custom table or model. The quick rule of thumb is that the sequence of data that you have more of would go from top to down. For example, let's say you're dealing with a table of daily temperatures, air quality, wind, precipitation for a year. You have 4 characteristics and 365 days. So the characteristics would go from left to right, and the daily temperatures data would go from top to bottom. But let's say that there are 4 dates and 4 weather characteristics. In this case, it doesn't really matter which goes in a row and which goes in the column. But typically, time will go from left to right as long as there aren't more than 20. Now those are the basics of Excel. Let's do a knowledge check. I'd like you to follow these steps and create a table of your own. At the end, see if you get the same outcome as mine. Here is the scenario context. Your client owns a restaurant and has a list of receipts for ingredients for the week. Let's create a table to see what the total revenue is for a 3-day weekend from Friday, April 7th to Sunday, April 9th. Then subtotal the cost per day and find out what the total cost is for the 3-day weekend. And here's the info from the receipts. When the owner makes these purchases on the credit card, the items are automatically categorized. On April 7th, your client spent $1,000 on meat, $750 on seafood, $500 on vegetables, and $100 on fruit. On April 8th, your client spent $1,250 on meat, $1,100 on seafood, $800 on vegetables, and $100 on fruit. On April 9th, your client spent $500 on meat, $550 on seafood, $275 on vegetables, and $60 on fruit. Create a table that shows these numbers and a subtotal of the total cost for each day. Pause this video and try to create this on your own. Think about what would go from left to right and what would go from top to bottom. Format the numbers, the heading, and the table, and check back here once you're done. Now here's the solution. Let's check your answers. Let's go through it together. Usually when I start a new worksheet, I like to put a little margin on the left and the top. So I'm going to resize column A so it gives me a little margin, and also the same for row 1. I have 3 dates and 4 food categories. Since I have more food categories than dates, this will go from top to bottom in the column, and the dates will go from left to right. And since the table info will be in dollars, let's put the unit in the top left of the table first in cell B2. Then from left to right, starting in cell C2, I will put the dates. Then in cell B3, I will put the food categories meat, then press enter, seafood, then press enter, vegetables, then press enter, and then fruit. Let's put the amount from the data we were given. Type in 1,000 in cell C3 for meat under April 7th, then 750 for seafood, 500 for vegetables, and 100 for fruit. Then under April 8th, we have 1,250 for meat, 1,100 for seafood, 800 for vegetables, and 100 for fruit. Then on April 9th, we have 500 for meat, 550 for seafood, 275 for vegetables, and 60 for fruit. And again, after you type something in a cell, if you want to go to the next cell over to the right, then press Tab on your keyboard. If you want to go to the below cell, press Enter on your keyboard, or use the arrow keys to navigate from cell to cell. One thing you might notice is that some of the numbers are in thousands and there are no commas between every 3 digits as we went through earlier. To change the number format, remember that we can do this a few ways. One of the ways is to do a custom number format, or you can simply highlight all these numbers, click on the comma. This will add the comma every 3 digits, but it will also add 2 decimal places, which in this case we don't want. So we will click on the decimal button with the right arrow twice. The task now is to subtotal for each day. In cell C7, we will start a function with equals, then use your arrow and go to cell C3, then type plus, then use your arrows again to go to cell C4, and use your arrow again to go to cell C5 and type plus, go to cell C6. Let's press enter. In the next section of the course, we'll go over the sum function to make it easier rather than using the plus sign for every number. Repeat the same for April 8th and April 9th. Copy cell C7 and then go to D7 and paste. Let's now find the subtotal for each food category. And repeat for cells F5 and F6. Let's add the missing labels in the table. In cell B7, let's write subtotal by date. At the top of this column, let's type subtotal by category. Let's fix the words that are outside of its box, like in cell F2. Let's highlight that cell and wrap the text by clicking on the Wrap Text button under the Home ribbon. Or if you have Windows, the keyboard shortcut is Alt-HW. For cell B7, where the words are too long for the box again, if we wrap the text here, then we'll have an extra space in the table which may look a little out of place. So instead of wrapping the text, let's just increase the width of this column. You can resize the column by putting your mouse in between B and C until a little cross appears, and double-click, and then the column width will match the longest value in the column automatically. And if you have Windows, you can highlight cell B7 and type Alt-OCA or Alt-HOI to automatically adjust the column width. And finally, let's put a border around the table. To put an outside border around the highlighted cells, type Alt-HBS. Notice that most of these keyboard shortcuts are when you press Alt first, then there are letters that appear under each ribbon. So like H would be the Home ribbon, and under the Home ribbon, you see B under the borders. And when you press B, you can see all of the letters for the shortcut for if you want to put a border around the left, top, right, bottom, all around, or all inside, etc. That's all it is for the keyboard shortcuts. For all of the other shortcuts as well, when you press Alt first, you can see the letters that pop up under each ribbon, and then new letters appear. And once you get used to these, there are some common ones that you will keep using repeatedly until you memorize them. All we need to do now is to find the grand total. If this was your first time creating a table in Excel, congratulations! The more you practice and build tables and models in Excel, the faster you will be in creating them, and all of these keyboard shortcuts and buttons will become very intuitive to use. And if you don't remember everything we learned in this section, don't worry, we'll touch on these again as we build the financial model. This was just a very easy practice. Now let's go on to the most commonly used functions or formulas. We will go over the most commonly used functions that you will need to be comfortable with when building a financial model, as well as some other Excel tips and tricks. One thing you will always have in a financial model is a measurement of time going from left to right. In a financial planning model, you might have each column as a month or quarter, but in valuing a company, you will most likely work with years. Imagine you build a company valuation model and the starting year is 2023. Let's say that in 2 years, you want to update the model with new assumptions. At that point, you can retype the years for a 10-year model so that 2023 is now 2025 and 2024 is now 2026, etc. But this does not make the model dynamic. A dynamic model is where you can change as few inputs as possible and the rest of the model will update and adjust. When you put the numbers in the cells that won't change, they are called hard-coded numbers. So to make the model dynamic, you would do a cell reference in the formula, meaning you would quote another cell in the formula. Let's say the starting year for the model is 2023. Then the next cell over, I'm going to put equals the adjacent cell before plus 1 and copy that formula over to the next cells over. That way, 2 years later, if I want to update the model, I can just change the input cell here to 2025 and the rest of the years will update. This makes the model dynamic. Let's move on to a few simple formulas. They will get progressively more difficult. The first and most commonly used formula is probably the sum formula. When you have a series of numbers like the table here, which shows the amount of money earned from yard trimmings in a week, we can add them up one by one to get the total. Or we can use the sum formula. Start with equals, then type sum and open up the bracket. And as a side note, all function commands that Excel knows must open with a bracket after the command and close at the end. So here in the total column, we type equals sum for sum, open the bracket, and use the arrow key and the shift button to highlight the other cells. Once you've highlighted the cells you want to add up, press enter. Let's now talk about locking the reference cells. What that means is that when we copy and paste the formula to different cells, we want the cell reference to be the same as the previous cell. For example, let's look at the yard trimming table again, and let's say we want to know the cumulative sum of the amount earned for the first 2 days, and then the first 3 days, and then the first 4 days, etc. If you don't want the letter or the cell reference to change, we use the $sign in front of either the letter or the number or both. In the table, let's look at day 2. We want to sum from cell C3 to D3, and we want C3 to stay the same so that in cell E4, it can sum from cell C3 to E3 so that C3 does not change. In cell D4, let's type in equals sum, open bracket, C3, and press the F4 button. This puts a $sign in front of both C and 3, which locks this cell reference. Then type colon, and then D3, and hit enter. Now let's copy cell D4 that we just typed and paste it into E4. Press the F2 button to open up the cell into typing mode and see what happens. We can see that the sum has extended to E3, but the C3 has not changed. So let's copy cell D4 and paste it to all the other missing cells in the cumulative row. What we've essentially done is to make day 1 stay the same in the sum so that the cumulative of day 2 is the sum of day 1 to day 2, and the cumulative of day 3 is the sum of day 1 to day 3, and the cumulative of day 7 is the sum from day 1 to day 7. Sometimes you may only want to lock the cell so that the row stays the same but the column changes, or so that the column changes but the row stays the same. We will look at these more while building the financial model, but for now, I just wanted to make sure you know the basics of a cell reference and how to lock it using F4 or typing in the $ manually in front of the cell letter and number. This next Excel function is probably the most commonly used function after sum when building a financial model, which is the if statement. The logic of using the if statement is quite easy to follow, and you can use it in a wide range of situations. The order of inputs for the if statement is equals, if, open bracket, if x is like this, then do y, and if not, then do z. We separate these three things with a comma. Let's say we have a table with the stats of points scored by players during a basketball game. We have the number of points and the number of assists by player. In a new column, let's write an if statement to look for players who have points above 10. In column E, we start with equals, then type if and open the bracket, and with any command when you open the bracket, Excel will guide us through what we need to input next. The logic is if A, then B will happen. So let's go if the cell to the left in column C is above 10, then we want it to say true, and if not, then we want it to say false. Again, that's equals, if, open bracket, use your left arrow on your keyboard to highlight cell C3, then type greater than, which is the chevron above the period, then type 10, and comma, start typing true, and you'll see true pop up on Excel. And when you see that, you can press tab to finish typing it, or you can just type true, then comma again, and if you start typing false, you'll also see Excel prompt false, so you can type tab, or you can finish typing false. Then close the bracket and hit enter on your keyboard. And we see that for player 1, the formula yields true because player 1 does have above 10 points. Next, what if we want the ability to change the 10 points threshold in our analysis? This is a good reminder that we should try not to have any hard code inputs in the actual formulas. In other words, do not put 10 in the actual function or formula. We want it to be a cell reference instead. As a reminder from the previous section, the reason why is because as the financial model gets more complex, we won't be able to look into every function, so we may miss any hard-coded functions, and then the model won't be dynamic. I am sure I will mention this again and again. So let's add a new column between D and E, and designate the first cell in this column to show the threshold input of what we want the if statement to test. Let's put 10 here because that's the threshold that we want to check, and we will make it a blue font because it is an input. We will go over this again as well. We'll update this formula here to replace the 10 with this cell here. And we're going to lock this cell because when we copy and paste this formula down to the cells below this column, we want the cell reference with the 10 input threshold to not change. And remember that we can lock it with the F4 key. The if statement is very customizable, so we don't need to use true or false as the outcome of an if statement. We can use text as the outcome, or a number. Let's change the function to say if the player has greater or equal to 10 points, then we want the cell to say greater than or equal to 10 points. Other than true or false, which are commands in Excel, if we want to show text, we have to put quotes around it to denote that it is a text. We will use the if statement over and over again, so we'll encounter more as we practice. We've now looked at the sum function to add numbers, and we looked at the if statement. We can combine these two functions into a SUMIF or SUMIFS function. The SUMIF is if there is only one conditional if statement. For example, let's say with a dataset of ingredient costs, if the cost was for meat, then you want all the meat costs to sum up. We use equals, sum if, open bracket, and Excel shows you what you need next, which is the range. So here you highlight the criteria range. Then the next that it shows is the criteria, which is we want the meat to be the criteria that's met. And then the range that you want to sum up. So this cell, when you hit enter, shows all of the costs that are summed up if it is only for meat. The next is average, average if, and average ifs. Here I have a data set of about 200 public renewable energy companies by type of renewable energy they primarily operate in. For each company, there's information on their revenue and net income. I want to find the average annual revenue size for these companies. In that case, I would use the average function. Type equals average, open bracket, and select the cells with the revenues, and format it. Next, I want to find the average revenue for companies only if their renewable energy is solar. Let's type in equals average if, open bracket, and again, Excel guides us through what input to put in the brackets. It first asks for the range, criteria, and then the average range. The average range is the revenues that we want to average. So after we open the bracket, we highlight the cells in the column that has what we're looking for in the criteria, which is the text solar. Then type comma, and we put the criteria, which is solar. We can type in solar with the quotes, but again, we don't want to hard code in the formula, so we'll fix this in a bit. But for now, after we type solar in quotes, which is the criteria, we put another comma, and then highlight the cells that we want to average, which is the column with the revenues, and then hit enter. Now let's go back and fix the hard code so we don't have hard codes anymore. Let's type in solar in this cell instead. And then go back to our formula, highlight what we want to replace, which was the quote solar in text, and then click the cell reference instead, and then hit enter. Now I want to find out what the average revenue size is for companies whose renewable energy is solar, and only if the revenue size is less than $200 million. So I want to average all of the smaller companies with revenues below $200 million that are solar. In this case, we have more than one criteria, so we use average ifs, which is average if with S at the end. Just like for sum if and sum ifs, the order of inputs we put in the formula is going to be different when we have more than one criteria, so pay attention to what the Excel guides us through in terms of the inputs that we put in order. Before we build the formulas, let's put our criteria in the cells here so that we don't have to hard code the criteria into the formulas and we can use these cells as reference. We already have solar, so let's also type in $200 million so that we can reference this cell as the criteria we're looking for. And note that the formatting of the revenues in this column is just in millions and we don't need to put the extra 6 zeros. So pay attention to that depending on what the data set you're working with is, which is why we only type in 200 here as the criteria. Let's type in equals average ifs, open bracket, and Excel asks us to input the average range, which is the revenue that we want to average. So let's highlight the cells with the revenues, type comma, and it asks for the first criteria range. And for this, let's highlight the cells with the criteria solar in it. Then, comma, it asks us for the criteria, so let's put the cell reference with solar. Then we type in comma again, and we're going to type in the second criteria range, which is that we want the revenues to be less than 200 million. So our criteria range is going to be the cells with revenues. Then type in comma, and the second criteria is going to be the 200 million. Let's pause here and think about this logically. If we just reference the cell with 200, what the formula is saying is to average the revenues if the revenues are $200 million. But the criteria we want to build is average the revenues if the revenues are below or equal to $200 million. For less than or equal to or greater than criterias, we put quotes around the chevron symbol or the triangular brackets. So instead of just putting the cell reference 200, we would put quote less than sign, then equals, and 200, and close with the quotes again. So now we are averaging all the revenues if the company is solar and the revenue size is less than $200 million. But if you were thinking, well, we don't want to hard code and put the 200 in the formulas, then you are exactly right. Since we're using the cell reference instead of typing in 200, we put the quotes around only the symbols and then use an ampersand, which is the and sign, which is Shift 7 on your keyboard, and then click on the cell reference. So it should look something like this. Quotes, less than, equal to, quotes again, and symbol, and then the cell reference, and then hit enter. And as you can see, the average is still the same as if you put 200 in the formula directly as the hard code, or if you use the cell reference with the and sign. At this point, if you're kind of panicking and stressing out that you can't memorize all of this right now, do not worry. As we practice building more financial models, these things pop up and you remember after repeated practice. And also just knowing that this kind of formula exists is really what we want to accomplish now, because you can always Google for the formula if you forget. The next set of formulas is the counting formula. There are a few variations of the count formulas depending on what you're looking for, so let's go through them one by one. The first is simply to count how many cells are highlighted. This is just equals count, open bracket, and highlight all the cells that you want to count, and hit enter. Another useful function is counting all the cells that you highlighted which are not blanks. In the renewable energy company dataset that we just looked at, column C shows companies that produce hydroelectricity. Only those companies that operate in this space have the word hydroelectric in it, and the ones that are not hydroelectric companies just have blanks in those cells. So I'm going to use the count A to see how many cells have the word hydroelectric in it. Type in equals count A, open bracket, then highlight the cells and hit enter. Just like SUMIF and AVERAGEIF, COUNTIF is the if statement to count a range of cells if they meet a certain criteria. Let's repurpose our AVERAGEIF function to count the number of companies that have revenues below $200 million. Type in equals COUNTIF, open bracket. First, we highlight the range, which will be the revenues column. Type in comma, and then it asks for the criteria, so we will use the same criteria as what we used before, which is less than or equal to 200 million. And since we don't want to hard code 200 million, we're going to put the quotes around just the less than or equal to symbols, then type in the and symbol, because we must do that for Excel to recognize the cell reference that comes after, and hit enter. Did you notice that when you typed in equals COUNTIF open bracket, Excel asked for just the range and the criteria, whereas for AVERAGEIF and SUMIF, Excel asks for three things: the range, criteria, and the sum range. That's because for counting cells, Excel doesn't need a column with numbers to sum or average. They're just counting the cells that meet the criteria. So just keep that in mind, that the inputs Excel asks for is different, and you should follow Excel's guidance on which inputs to put in the formula, which shows up after you type in the open bracket. Next, COUNTIFs with an S at the end is to count the number of cells that have more than one criteria. Let's build on the COUNTIF function that we created. Let's say we want to count the number of cells that have revenues between $100 and $200 million. Before we type the formula, let's put the criteria in separate cells here with 200 and 100 so that we can reference these cells instead of hard coding. Then let's type in equals COUNTIFs, open bracket, and then Excel asks for the criteria range, criteria, criteria range, criteria, so on. So we will first put the criteria range, which is the cells with the revenues, type in comma, then the first criteria is less than or equal to 200 million, which is the less than equal to in quotes, and then an and sign, and the cell reference with 200 in it. Then we type in comma, and the next criteria range is also the same cells with the revenues, and the second criteria is going to be quotes greater than or equal to, end quote, with the cell reference that has 100 in it, and then hit enter. There are a few more variations of count functions, and you can start typing count, and Excel will show you a list of those count commands that you can use. Next is max min. This is very simple and intuitive to use. The max function tells you the highest number in the range, and the min function tells you the lowest number in the range. Type equals max, open bracket, and then highlight the range and hit enter. Similarly, to find out what the lowest number is in the range, type equals min, open bracket, highlight the range, and hit enter. In our data with the revenues, the maximum or the highest revenue is $7.9 billion, and the minimum or the lowest revenue is $0.1 million. The next function is the round function. The round function is useful for financial models, particularly for when you want to present the final number in the dashboard or the summary page. You can round the number by zeros, tens, hundreds, 0.1s, etc. For example, here we have Company A's annual revenue for 2020, 2021, and 2022. The total revenue for these 3 years is $473,461,581.40, and the average revenue is $157,820,527.10. If we're reporting these numbers in the summary in our presentation to executives or investors, do we really need to quote the exact number to the cents? In the appendix with the supporting details, maybe, but in the summary or the dashboard or the presentation, no, we do not need to show all of these digits because the numbers are just not going to be easy to read or remember. Type equals, round, open bracket, and then we're going to nest the sum formula that we already have here so that the answer from the sum formula is rounded. Type comma, and the digit that we want to round it to, which is thousands in this case, is going to be -3, and close bracket and hit enter. And if we want to round it to 1,000,000 instead, we put -6 because that's 6 zeros to the left of where the decimal place is, and hit enter. If we want to round it to the decimal places, like thousandths or hundredths, then we don't use the negative and we count the number of zeros from the decimal place to the right. The next useful function is the if error. When building a financial model, sometimes you run into rows or columns where the formula may result in an error because you might be missing some data and you can't divide by 0 as an example. In that case, we want to use the if error function and put it in front of other functions. For example, let's say that I have the net income figures for the year to date in 2023 from the finance team, but I don't have the revenue numbers yet because the sales team hasn't sent in their report. In the next row down, let's calculate the net profit margin by dividing the net income by the revenues for each year. And we can copy and paste this formula in cell C5 to the cells in the next years. We have 15.2% net profit in 2020, 15.7% in 2021, and 16.3% in 2022. But look at 2023. We have a number sign div 0 exclamation mark. This is saying we can't divide by 0 and is showing us an error. Imagine we're reporting on a monthly basis and we have a lot of missing data. Then we're going to get a lot of these div errors or other types of errors even though we know that the data is missing and it's not wrong. We're just waiting for it. To avoid seeing these errors, let's go back to cell C5 and in front of what we have, let's type equals if error, open bracket, then leave in the function that was already here, and then put comma, and let's say we want it to show 0 if there is an error. Then we put 0 and hit enter. If we formatted the cells so that any 0 figure shows a dash line, then we will see a dash if there is an error here. Those are the most common functions that we've covered just now. We'll go over more of them later, but so far, these are what we need to build a financial model. Now let's briefly go over some financial modeling best practices. And when it comes to financial modeling, there are preferences that financial modelers all have. But these first 3 tips are universal best practices that all financial modelers follow, which is really useful because then you can pick up your colleague's model and know how to navigate it easily. First is, for any cells with hard-coded inputs, use a blue font. Second is, for any cells that are linked from other tabs or worksheets, use a green font. For any calculations that use references within the same worksheet, leave them as black font. Now that we have those universal best practice tips out of the way, the next best practices are followed by most financial modelers, but not all. So you can just pick the ones that you like in your toolkit. First is, you're going to end up with a lot of worksheets or tabs in a financial model, so it's useful to have the same years line up in the same columns. That way, when you link from other tabs, you can easily identify if your formula is correctly linked to the right year by looking at the column letter of the current tab and the linked tab. For example, if year 2020 starts in column C, then in other tabs, I would have year 2020 also start in column C as well. Next tip is, when you're building a financial model with only a few tabs, you can have assumption inputs mixed with calculations on the same tab. But when you get into building complex financial models with more than 10 tabs for separate calculations, it's easier to see what all the inputs are if you have a separate assumption inputs tab. If you decide to have inputs mixed in the tabs with calculations, then one best practice is to designate just one column to be where all the inputs go. For example, let's say you have an income statement, and maybe in the column with the inputs, we have the annual revenue growth, maybe we have the cost of goods sold percentage input, we have the operating cost percentage of revenue as assumption inputs. They all fall in the same column here, these inputs. Or if you have many tabs and decide to have just one input page, then you'll have a section on that page for revenue assumptions, cost of sales assumptions, operating cost assumptions, profit margin assumptions, and just have everything organized on one worksheet. Another best practice is around presentation of the numbers. As we briefly went over before with the decimals, if the model is in millions, we can omit showing the 6 digits after the millions. If we're dealing with up to tens or hundreds of millions, we might want to show only one decimal place for the 100,000 digit. Remember from way in the beginning of this course that to custom format these numbers to not show the 6 digits of millions, go to Custom and build your own with 2 commas to hide the 6 digits. The next best practice is for percents such as revenue growth, gross profit, net profit margin, CAGR, etc., format it so that they are italicized. I usually also like to choose a dark gray color for percentages as well so that your eyes can easily take in the millions of dollar amounts and the percentage separately. The next here is more of a tip than best practice, but focus on building the model first with the right numbers and content, and you can format the model to make it look nice and pretty at the very end. In other words, don't waste too much time while you're building the model to make it look perfect and pretty, because the functionality is more important than how it looks. But of course, when you want to present it and make it look professional, we do want to spend some time to make it look organized, refined, and pretty. And that's it. Again, we'll run into these as we build the model, especially as we start practicing models that are harder and harder. So if you don't remember everything right now, don't worry about it. Now that you've gone over it once together, and as you become more and more familiar with these, you'll just become more and more used to using them. In this section, let's do a brief refresher on financial statements. If you're an accountant or you just have a really good lay of the land in terms of financial statements, feel free to skip this section. The 3 financial statements we'll go over are the balance sheet, the P&L, which is also called the profit and loss statement or income statement, and thirdly is the cash flow statement. First, let's talk about the balance sheet. The balance sheet has 3 sections: assets, liabilities, and owner's equity. Assets are cash, equipment, inventory, and other items that are needed to operate the company and produce revenue. Liabilities are the opposite of that. Liabilities include bills that you have to pay, invoices, and other types of obligations that need to be paid, such as accounts payable, credit card payments, loan payments, etc. And the third section, which is shareholders' equity or owner's equity, this you can think of as basically what's left over when you take all your assets and reduce it by all the obligations you owe. And the more debt there is, the more risk the company has because they have to reduce all their assets by the liabilities. And what's left over is how much shareholder or the owner of the company owns. The assets on the left has current assets and long-term assets. Current assets include cash, accounts receivable, prepaid amount in inventory, and more. Long-term assets include leasehold improvements, accumulated depreciation, fixed assets, and basically something that lasts for more than a year. When you add up the current assets and long-term assets, you get total assets. Liabilities on the right-hand side is also made up of current and long-term. Current liabilities include short-term debt, credit card payments, accounts payable, and a portion of the long-term debt that is due within the next year. Long-term liabilities include debt that is due over a year from now, like mortgage payments, other multi-year loan payments, lease obligations, and more. If we add these up, then we get total liabilities. If you take the total assets and subtract it by the total liabilities, we get the owner's equity or shareholder's equity. Owner's equity includes retained earnings, which is all the leftover profit after all the obligations are made, common stock, which is the shares that the owners own, and different types of shares like preferred shares. When you look at the balance sheet, if there's way more liabilities than equity, that means the company is highly leveraged and is on the risky side, because what they owe is more than what they own. Now let's take a look at the P&L or the income statement. The income statement essentially shows the results of a company's operations over a period of time. So that could be on a quarterly basis, monthly basis, or annual basis, or 6 months. It shows how much revenue the company made, the cost of goods and sold that they sold, and other costs to run the business. And when you add and subtract all the different parts of the income inflow and outflow to the business, you end up with the net income. Or if the company lost money, then they end up with a net loss. Most businesses have an accounting software and a financial planning and analysis team that can look at the income statement on a monthly basis, and for public companies, they have to report them on a quarterly and annual basis. Think of the income statement in 5 sections: revenue, variable cost, fixed cost, other non-operating income and expenses, and then finally the net income or net loss. The revenue section will most likely just be one line that shows the total revenue, or in some cases the company has multiple revenue streams that they'll break down, and in which case the income statement might have revenues by stream and then add them all up to show the total revenue. The second part is the variable cost, also known as cost of goods sold or cost of sales. These are the costs that are proportional to the revenues you earn. For example, let's say you own a factory that makes fidget spinners. To make the fidget spinner, you have a machine where you pour plastic into the mold and it produces the final product. To make one fidget spinner in the machine, you pour in 10 little plastic pellets. To make 2 fidget spinners, you pour in 20 little plastic pellets. And to make 1,000, you need 10 times 1,000, which is 10,000 plastic pellets. The cost of these plastic pellets are variable to the revenue you generate, and these are the cost of goods sold. Then we get to the fixed costs, which include the operating costs. For example, to operate fidget spinner machines, you have to use electricity. When you turn on the electricity for this machine for 4 hours, it doesn't matter if you produce 1 fidget spinner or 1,000, the cost of electricity for 4 hours will be fixed. So this cost is a part of the operating cost section. Other operating expenses include advertising and sales, other general and administrative expenses, or G&A, like rent and supplies. We then take into account all the non-operating income and expenses. For example, insurance proceeds, interest expense, interest income. Those are a part of the business, but they're not a part of making and selling the goods. And finally, when all the line items are added up, you get the net income or net loss. To organize the income statement so it's easier to read, in between the line items, we show different levels of profit margin as we move down the income statement. For example, after the revenues and variable costs, you get the gross profit. After the operating expenses, you have operating income margin or EBITDA margin. And after the net income, you have net profit margin. The third and the final financial statement is statement of cash flows, or the cash flow statement. The statement of cash flows looks at all the cash that flowed in and out of the company. The cash inflow and the outflow of the company are grouped into three primary categories: operating, investing, and financing activities over a period of time. This is to help answer questions like, where did the company's cash come from? Where did the company use its cash? Knowing how the cash actually came into the company and how the company is using up the cash can be used in conjunction with the other two financial statements to dig deeper into understanding the health of the company's operations. This is because the income statement has a lot of non-cash items that when you do have the net income, it may not necessarily mean that the company had a positive cash flow coming into the company. For example, this one company that the fund that I worked for invested in, they had positive net income, but when we dug deeper, they were out of money and they had to go and ask the bank for more cash and leveraging up the company even more. Eventually, the company went bankrupt, even though their net income showed positive net income. And this is all because they ran out of cash. You may have heard the term cash is king, and that's why the cash flow statement is incredibly important. The cash from operating activities shows the cash flows generated by the daily operations of the business. Cash from investing activities include buying property and equipment, or acquiring a company or proceeds from selling equipment. Cash from financing activities include debt payments, or getting a lump sum loan, paying shareholders in dividends, or buying back shares. At the end, all of these cash flows from the three categories are added up to show the net cash flow into or out of the company. The income statement can show a positive net income, but the net cash flow can be negative. To reiterate, cash flow statement is extremely important in gauging whether the company is actually generating cash or if it's all just fluff on paper. Next, let's finally build our own financial projection model. But first, what does it mean when we say financial model, and when do you need a financial model? A model itself is a very loose term to describe a structure or a framework. A model in the context of financial model is just creating that framework to show the financials of a company. One situation you might need a financial model is when you're doing internal planning. Every big company creates a budget, or even small companies, or a financial forecast to set goals for their sales, expenses, and profitability. These forecasts ensure everyone in the organization in different groups are on the same page and they're focusing on hitting their goals. The company also wants to do this to analyze cash flow and capital needs. For example, if they know that from their forecast they have low cash flow coming in during the winter months, then they might want to reduce their costs during that time. Another situation is a financial forecast for the company's investors, whether they're discussing the future state of the business or trying to secure an investment. Or if the business is trying to get a loan, the banks will also demand a financial forecast to make sure that the company can meet their loan obligations. And another situation in which a financial forecast is needed is to evaluate an investment opportunity. This can be for an individual investor or an investment bank that is facilitating an investment transaction, or a fund that wants to invest in the company. The financial forecast will be turned into the valuation of the company. In all these situations, a financial forecast process is simply the first step in analyzing the historical financial data and predicting what will happen financially to the best of their ability based on patterns observed in the business historically. But relying only on historical financials is only a good start, as there may be many assumptions that are different going forward that impact the future performance of the company. For example, key employee retention, or retirement, or industry trends. After these adjustments are made and the assumptions are tested and refined, the last step is to review and finalize into a presentable format and getting sign-off from different groups in the organization that were involved in providing inputs to the financial forecast. Now let's build our own financial forecast with a simple case study. Our client, Joe, owns the company Joe's 3D4U, which is a 3D printing company in her city. She would like her help in creating revenue, cost of goods sold, and gross profit forecast by month for 2023, an operating expense forecast, business loan payments forecast, depreciation waterfall, a cash flow statement, an income statement, and the balance sheet for 2023. We have a 1-year actual balance sheet, sales data by month, and additional assumptions as follows. And make sure that if you want to follow along with the case study and create your own model as you watch this video, you'll need the historical financial statements. So pause this video and go download it for free before we continue. The link is in the description. The additional assumptions are as follows. Regular 3D printing services sold are expected to increase by 10% year over year each month over the last year. The sales price per 3D printing service is $200 and it costs $82 to make it. Premium 3D printing services sold are expected to increase by 15% over each month over last year's. The sales price per service is $225 and the cost of goods sold is $66 to make. Salaries were 30% of total revenue in 2022. Bonus and payroll benefits were about 10% of the total salaries. Salaries will increase by 3% over last year as actuals for each month. The operating cost breakdown for 2022 are as follows. Advertising was 1.75% of total revenue. Rent was $10,000 per month. Insurance was about 0.25% of revenue. And other G&A costs were 1% of revenue. All fixed operating expenses will increase by 3% over last year's actuals for each month. In January 2022, Joe got a 36-month small business loan for $50,000 at 8% interest from her local bank. She has to pay 8% interest of $50,000 in total per year, but she has to pay it on a monthly basis. And then at the end of the 36-month loan, she'll pay the principal of $50,000 back. The depreciation method is straight line for 5 years for the 3D printing machine that was purchased in the beginning of 2022. No additional fixed assets will be purchased during the year. Taxes for the business are assumed to be zero at this point because the company is considered a startup and is part of the Startup Subsidization Program by the government. Let's now dive into building the model out one step at a time. And again, before we start building out the model, make sure to download the historical financial statements that are given for this case study. The link is in the description. It's absolutely free, so go and download it if you'd like to follow along and create your own. Task 1 is to build a projected monthly revenue gross profit forecast. Start with labeling the top left of the worksheet with the name of the company and what the worksheet is for. So at the top, I'll put Joe's 3D4U, and then right after that, I'll put 2023 revenue, COGS, and gross profit forecast. There are 3 components of projection we need to make on this worksheet. One is revenue, so we'll start with that. Since units will vary in this calculation table, instead of putting a $sign in thousands, we can put projected revenue in the top left, and let's use the next column for assumptions, the next column for units, and then the time period, which in this case is monthly. So let's put January, February, all the way to December. Let's bold the header, and we can put a thick bottom border under the heading for all the worksheets to be consistent. If you're using Windows, the keyboard shortcut for that is Alt-HBH. And also, one thing I like to do with all my worksheets is to have a very narrow column on the very left and a very narrow row at the very top to put margins on either sides. That is completely a preference thing, so you don't have to do that. Now let's adjust the column size to show the words that are cut off and bold the top row. One thing many financial modelers do is to put an empty column just before when the numbers start, which in this case is before the January column. This is so that it makes it easier to navigate to or highlight the rows faster when you use Control plus the left or the right arrow, or Control Shift and left and the right arrow. So we can right-click on column E and insert a new column and adjust the size to a narrow column because it's just to add a bit of gap. To calculate the revenue, we have two different products, regular and premium. We know last year's given monthly unit sales, and we are also given the assumptions for the percentage increase year over year for each month. Let's start with what we know. Type regular 3D printing services, and underneath that, let's type 2022 unit sales. We're going to link from January to December from the 2022 sales tab. We can link it one by one, or we can use a lookup formula. Since the table we're looking up the sales units from is going downwards vertically, we can use a VLOOKUP. In cell F8 for 2022 unit sales in January, let's type equals VLOOKUP, open bracket, then use the up arrow to navigate to January, which is in cell F5, and press the F4 button on your keyboard twice until the $ appears on the row 5 of F5, because you want to lock just the row but not the column. Then type comma, and the next thing it asks for is the table array. So go to the 2022 sales unit tab and highlight the regular services sold table from B5 to C16, and we're going to press the F4 button again to lock the column and the row for that range. Then type comma, and then the next item it asks for is the column index. The column index is in the highlighted range which column has the data that you're trying to pull from. The first column in the highlighted range is the months. That would be column index 1. The unit sales to the right of the months is column index 2, and that's what we're looking for. So type 2, and then type comma, then it asks for the range lookup. Start typing false, and you'll see true and false appear. Either just type false or click on the false in the drop-down list, or navigate with the down arrow, and then press tab on your keyboard. Then once you see it in the formula, hit enter on your keyboard. The false just means to look up the exact number that you're looking for as opposed to an approximate. Now let's copy and paste the formula over to December. Type Ctrl-C on the cell with 48. Then hold down the Shift on your keyboard and keep pressing the right arrow to highlight all the cells to December, and then let go and press Enter, or Ctrl-V. Let's change the font color here to green because these numbers are linked from a different worksheet. In the next row, type year-over-year growth, and in the assumption column, let's put 10%, since that's what it says in the assumptions. Change the font color to blue since it's a hard-coded input. The next row is going to be the 2023 unit sales. Go to January and type equals and link to the 2022 unit sales in 2022 with your arrow, or click on that cell with the 48 in it. Times, open bracket, 1 plus, then cell C9, and press the F4 key 3 times to lock the column C of the cell with the 10% input, then close bracket and hit enter. So it should say $C9. Then copy the formula in this cell and paste it to the rest of the months in the row. Now let's format the row so the units don't show the decimal place since we don't need to see fractional units of services sold. In the units, we can put numbers to denote the unit of the sales. And we can do that for the 2022 unit sales row as well. In the next row, type unit price, and in the assumptions, put $200. Let's change the font color to blue. In the next row, type revenue. In the revenue row, we're going to put the formula starting in January to calculate the revenue, which will be the 2023 unit sales in that month times the revenue. So that's going to be equal sign, and use your arrow to navigate to January 2023 unit sales of 53 units, then the asterisk sign for multiplication, and highlight $200, and press the F4 key 3 times to lock just the column of the cell with the $200 in it, and hit enter. Then let's copy the cell with the formula and highlight the row all the way to December and hit enter. In the units column, we can put $. Now that we have the revenues, we can calculate the cost of goods sold. and the case assumptions give us the cost per unit, which is $82 for the regular. Similar to the unit price, let's put the cost per unit and under assumptions put $82 in blue font since it's a hard-coded input. And in the next row, we'll calculate the cost of goods sold similarly to how we calculated revenue, but multiplying the 2023 units sold by the cost per unit. Go to the January column in the cost of goods sold row and type equals, then the January 2023 unit sales of 53 times the $82, and press F4 3 times to lock just the column of the $82 cell, and hit enter. Then let's copy the cell F14 and highlight the cells to December and press enter. In the units column, we can put $sign for cost of goods sold just like we did for revenue. Once we have the revenue and the cost of goods sold, the next row is gross profit. Type gross profit. The unit will also be $sign. Gross profit is just revenue minus cost of goods sold. So go to the January cell in the gross profit row and then type equals, then the January revenue minus the January cost of goods sold and hit enter. If Excel chooses its own formatting for you, then feel free to update the formatting so that there's consistency. One way I like to do this is to go to the cell with the format that you want to copy, then Control-C, then go to the cell that you want the formatting to update, and then press Control-Alt-V, which is the special paste, and then T, which just copies the format. And let's not forget about the total column either. At this point, if you want to see the labels in the left of the table while working on the total column, you can freeze the cells. Click on cell E6 below the header and to the right of the units, and go to the View ribbon and find Freeze Panes, or if you have Windows, you can use the keyboard shortcut Alt-W-F-F. For the 2022 unit sales under total, let's type equals, sum, open bracket, and highlight the cells to the left. And you can highlight the cells by, on your keyboard, pressing Control, Shift, and the left arrow, and then press Enter. Another shortcut is pressing Alt and the equal sign, and oftentimes Excel knows that you're trying to sum the nearest row or the column. So you can go to the 2023 unit sales row under the total column and try it. Press Alt and equal sign. Do the same and sum for the revenue, cost of goods sold, and the gross profit. And if you want, we can put a border on top and bottom of the row. If you have a Windows, the keyboard shortcut for borders is Alt-HBP for the top border, or Alt-HBO for the bottom border, or Alt-HBD for both top and bottom border. The next half is for the other product type, which is the premium 3D printing services. Again, we know the unit sales from the other tab called 3D4U 2022 sales. We also know that the product is to increase 15% year over year for every month, and we were also given the sales price, which is $225, and the cost per unit, which is $66. And because the premium product services looks very similar to the regular services, we can finish the next half of this task in a minute. Go ahead and highlight the rows 7 to 15, basically what we just created from the regular 3D printing services rows to gross profit. To easily do that, go to any cell in row 7 and press Shift and Space bar at the same time to highlight the entire row. Then, while you have the Shift key down, press the down arrow to highlight all the way down to row 15. Then press Ctrl-C on your keyboard to copy, and then use your down arrow button to go to row 17 so that we can leave one blank row below the gross profit for the regular. And once we're anywhere in row 17, press Shift and the space bar together to highlight the entire row while the cells that you copied are still flashing above. Then you can press Ctrl-V to paste the cells, or just press Enter. Now all we have to do is to make a few adjustments. First, where it says regular, let's change that to premium. Next, where we have the 2022 unit sales, the VLOOKUP is only looking up the sales from the regular 3D printing services table. So if we look at the formula by pressing F2 to open it up, we see that the formula says to look up cell F5, which is the month of January, and we still want that, so we can leave that as is. And the next table array that it's looking for is from the 2022 sales worksheet. It looks up the table B5 to C16. And if you look at the 2022 sales worksheet, that is the regular services. And the premium services table is actually from B19 to C30. So let's go back to the formula in the revenue worksheet. And where it says in January, let's update the table array in the VLOOKUP. And where it says B5, let's change that to B19. And where it says C16, let's change it to C30. Now the formula has been updated so that it's looking up the month of January in the 2022 unit sales worksheet, but for the premium services. Now that we've updated the formula, let's copy the cell and paste it all the way to December and hit enter. Now, as a note, we could have retyped the formula from scratch, but this way was just a little bit of a shortcut by looking up the table references and updating that in the formula. Now in the next row where it says year-over-year growth, let's update that to 15%. And the 2023 unit sales should update automatically. As a slight tangent, I want to go back to something that we did earlier and explain why we did it. Remember when we were creating this formula for the regular services table, and we locked the cell with the 10% year-over-year growth, but we only locked the column and not the row? In other words, we pressed the F4 key 3 times so that the formula had $C9 locked for the column. The reason why we didn't lock the row 9 is because when we copied the table from the regular services and pasted it here to create the premium services, we wanted the row to change so that the formula for the 2023 unit sales for premium is now updated to reference the 15% year over year. If we had locked that 10% cell for both the column and the row, if we copied and pasted the regular to premium, this cell would still be referencing the 10% up there. So just wanted to take a few seconds to call out that we need to be mindful of what we are locking in terms of cells. Do we want to lock both the column and the row, or do we want to lock just the column or just the row? Now for the unit price, let's change that to $225 and change the cost per unit to $66. The rest of the revenue, cost of goods sold, and the gross profit should automatically update. For the revenue and the cost of goods sold formula, we can see here as well that the cell that we locked for the unit price and the cost per unit has updated to cell C21 and C23. Again, that's because earlier we only locked the column and not the row when we were building the revenue and cost of goods sold formulas for the regular. As you become more familiar with why we lock only the row or the column, or when we lock both the column and the row, you will intuitively know when to do this as well. Finally, let's create a row at the very bottom for total revenue, which adds up the regular and premium services. That way, if we do need to grab this row for other calculations, we can easily do so rather than summing up the regular and premium services revenue every time. So type total revenue and $sign under units, and under January type equals, and grab the revenue from the regular plus grab the revenue from the premium and hit enter. Right below, let's also do the same thing for total cost of goods sold and total gross profit. With that, we have finished the first task, which is to build out the 2023 monthly revenue, cost of goods sold, and gross profit forecast. The next task is to build out the operating expense forecast. The operating expense or operating costs are all the fixed costs that do not vary proportionally to how much sales you make, to a certain extent. What I mean by that is, let's say you have an ice cream shop where you make your own ice cream. You employ 3 ice cream scoopers and 2 people to make ice cream. You're operating at a capacity of 50%. A circus comes to town and sets up right beside your ice cream shop. So your sales double. Now you're making double the amount of ice cream, so you're operating at a capacity of 100%. And you're a lot busier, but you're able to get by with the 3 ice cream scoopers. As you can see, the employees' salaries and the machinery that you already have are fixed cost. so they don't vary directly with the double the amount of sales you have. But presumably, there would be some increased costs. For example, let's say your employees start complaining that their wrists hurt from scooping too much ice cream without a break, and they demand you to hire another person to give them a break. And your electricity cost goes up because you're operating the machinery more. Now, these are fixed operating costs that did go up because your sales went up, but they didn't go up directly in proportion. So again, variable cost might be something like cones or cups that increase as the sales of ice cream increase. But when it comes to salaries or electricity, they might go up if your sales go up, but they don't go up in proportion to how much sales goes up. Now that we've covered what operating costs are, what are they for this company? Every company has similar categories of operating costs, but the exact operating cost line items would differ. We have two areas where we can find out what the operating costs are currently and project it for Joe's 3D for you. One place is from their last year's income statement, and the other is the list of assumptions stated at the start of the case study. So let's take a look at the 3D4U 2022 income statement tab. Operating costs come right below gross profit. The company's operating costs last year were salaries to their employees, bonus and payroll benefits paid to the employees, advertising, rent, insurance, and other G&A. Per the question, let's build out our own operating expense projection for 2023. As we did in the previous task of the revenue forecast worksheet, let's start with a narrow column and narrow row, which is just my preference, and the name of the company at the top left, and what the worksheet is for, which is 2023 operating expense forecast. Then let's start labeling the table, which is projected operating expenses, and we can have a column for assumption inputs, and we can have a column for what the units are. And I am going to put a narrow blank column after that to put a gap between where the labels end and when the numbers start. Then after that, we'll have the months start from January to December, and then a column for total. After the header, we can start listing the operating expense line items. Let's go back to last year's income statement and grab that list and copy and paste it here. The first line item is salaries. From our assumptions, it says salaries were 30% of total revenue in 2022. Bonus and payroll benefits were 10% of total salaries, and salaries will be 2% of revenue higher in 2023. Since salaries will be calculating off of the revenues, we're going to need the 2023 revenues from the other worksheet. One model preference here is some modelers like to link the cells from other worksheets directly in the formula that they're calculating, but I like to separate that out so that the cells that I am linking to from a different worksheet are on its own in this worksheet, and the other calculation cells can just reference it within this worksheet. That makes it much easier to audit the model later. So above salaries, I'm going to create a new row for 2023 revenue and link that from the revenue forecast worksheet we created. Now let's create the row and call it 2023 projected total revenue. And in January, let's grab the revenue from the other worksheet, and then let's turn it green because it's a reference from a different worksheet. And then let's copy and paste the January cell all the way to December. And in the total column, let's sum from January to December. In the salaries row under assumptions, let's put 12%. Dollar for units, and in January, let's type equals, and then the January revenue, and press the F4 key twice so that only the row is anchored. Then multiply by the 12%, and press the F4 key 3 times so that only the column for the 12% is anchored, and then hit enter. You should have equals $7 times $C9. Now copy and paste that cell all the way to December and calculate the total. The next row is the bonus and payroll benefits, and the assumption we were given is that it is 10% of total salaries. Let's go ahead and type 10% in the assumptions and color it blue for input. Put $sign for units, and under January, let's type the formula equals, and navigate to the salaries above and press F4 twice so that only the row is anchored, asterisk for the multiplied by, the 10% to the left, and press the F4 button 3 times so that only the column is anchored, and hit enter. Copy and paste it to December and calculate the total. Side note, if you have Windows, a shortcut key for if you want to copy and paste the cell from just above that cell is Control D. So in the total column, you can press Control D here and it will copy and paste the equals sum formula from the above cell. The next operating expense line item is advertising, which is 1.75% of total revenue in 2022, and other than rent, all other operating expense assumptions are expected to stay the same percentage of revenue for 2023. So let's come back to rent and tackle the same type of assumptions first, which are all the percentage of revenue costs. Since it's given in the assumptions, let's put 1.75% in the assumptions for advertising. Let's put 0.25% for insurance assumption, and let's put 1% for assumption in the other G&A cost. We can format these to show the decimal to 2 decimal places. Now, remember when we calculated the salaries, which was percentage of revenue here? We anchored the revenue row and the column for the assumption. Those are little modeling best practices which make you become more efficient at modeling, because now we can just copy this cell from the salaries row and then simply paste it under advertising, insurance, and other G&A. If you press F2 to look into each of these formulas, you'll see that the assumption is multiplying from the right row and it's grabbing the revenue row. That's because we anchored or locked the row for the revenue and we locked the column for the assumptions, but we didn't lock the row for the assumption. Now we can copy these and paste it all the way to December, and then find the totals. Now let's go back to rent. The assumption given is that in 2022, rent was $10,000 per month, and that in 2023, rent is expected to increase to $12,000 per month. So under assumptions, let's put $12,000 and make it blue for hard-coded input. And then in January, let's make it equals the assumption and anchor it by pressing the F4 key. And we don't have any variability in the rent from month to month in 2023. It's just going to be $12,000 a month every month. So we can copy and paste this cell all the way to December and then calculate the total. Now that's it for all the operating expense items in 2023. Let's create a row for total operating expenses and sum it for each month. And then we're all done. The next task is to create the projection for business loan payments. The assumptions tell us that in January 2022, Joe received a 36-month small business loan for $50,000 at 8% interest from her local bank. She has to pay 8% of $50,000 in total per year and break it up and pay it monthly. And then at the end of the 36 months, she'll pay the principal of $50,000 back. This is a very simple calculation, but nevertheless, let's create a worksheet with the hard-coded assumption inputs and calculate the monthly payments that are needed to link it to the income statement in the following steps. To start, I'm going to copy the operating expense tab by right-clicking on the worksheet name and clicking on Move or Copy, and check the box next to Create a Copy, and let's create it right after the operating expenses worksheet. That way we don't have to format the worksheet again from scratch. Once we copy the worksheet, right-click on the new worksheet name and click on Rename, and let's give it a new name called 3D4U Loan Payments. Let's rename the top of the worksheet left corner to 2023 Loan Payments, and in the top left corner of the table, we can call it Loan Payments as well, and we can remove all the rows we don't need. For example, we can delete the entire rows for the revenue and blank row after that, and the total expenses row because we don't want that format. And we can do that by pressing Shift and Spacebar to highlight the whole row, and then if you have Windows, the keyboard shortcut is Control and the minus sign to the right of 0 to delete those rows. Let's start the loan payments calculation with the first row being loan and put $50,000 under assumptions. And the next row being interest payments, put 8% under assumptions, put $ under units. And in the January column for loan payments, type in equals and the $50,000 cell, anchor it with the F4 key, then multiplied by the 8% cell, and anchor that too with the F4 key. Copy and paste the cell to December and calculate the total. Now the principal of $50,000 is going to be paid back 36 months from now, so let's say it will be December of 2024. Right now we're just creating monthly projections for 2023, so there's no column for us to put the $50,000 principal payment back. However, we will need this info later when we're creating the discounted cash flow. And we can do this anywhere, but since we're talking about the loan principal, let's go to cell B7 where it says loan and add us a comment or a note as a reminder. Go to the review ribbon, click on notes and new note, or click on comment. And if you have Windows, the keyboard shortcut is Alt-RTN for a new note or Alt-RC for a new comment. One good thing about a comment versus a note is that if you have a bunch of comments throughout the model, you can click on Review ribbon and Show Comments, and on the right-hand side, just like in a Word document, you can see all the comments in each worksheet. But with a note, you can also navigate to the next note, but you just can't see all of them together on the right-hand side like you can for comments. So let's leave a comment that says, loan principal payment of $50,000 to be paid back in December 2024. The next task is the depreciation waterfall for the 3D printing machine. It's silly to create a new assumption worksheet for this one calculation, especially when we have a lot of space here for the loan payments. So let's rename the loan payments worksheet to loan and depreciation and rename the top of the worksheet here to loan and depreciation. It's all just preference, so you can create a new worksheet as well if you'd like. The assumption is that the 3D printing machine the company currently operates was bought in January 2022. Since we just want to know the depreciation for 2023, we can just calculate it with simple calculations. First, type 3D printing machine, January 2022, and in the assumption we can put the cost. How do we know what the cost was? It should be under fixed assets in the balance sheet, which is $30,000. And since we know that the company only has one fixed asset, we know that this all $30,000 is for the printing machine. In the next row, let's type the assumption for the depreciation method, which is straight line. So type straight line depreciation years, and under assumptions, let's put 5. And both of these assumptions will be blue because they're hard-coded inputs. And the next row, we will calculate depreciation every month. So under January, let's type equals and highlight the cell with $30,000, anchor it with the F4 key, and then divide it by and go to the cell with the 5 years and lock that with the F4 key. And let's divide that by 12 since we want to calculate it on a monthly basis. Copy and paste it to December and calculate the total. The 3 tasks that we have left are the 3-statement financial model, which are the cash flow statement, income statement, and the balance sheet. So let's now start with the cash flow statement. Let's start a new worksheet, name it 3D for You 2023 Cash Flow, and as we did with the other worksheets, format it as you'd like. For me, I'm going to put a narrow first column and first row. Label the worksheet in the top left with the company name and the purpose of the worksheet. Let's name the table cash flow statements with a $sign because all the units will be in dollars. We don't need the assumption or unit column here because we're not doing any assumption calculations, and all the rows will be the same unit, which is dollars. Label the header with January to December and the total column. Remember one of the best practices that we went over at the start of the video, that we want to have the same column name for the same months or years. In the other tabs, January starts in column F. So we will set it up the same way so that January here in the cash flow statement also starts from column F. Generally speaking, the cash flow statement typically starts with net income or earnings and makes adjustments for all the non-cash items that were included in net income. But since we're doing a simplified version to illustrate for introductory understanding purposes, we'll break down what goes into the cash flow statement and keep it quite simple. Our cash flow statement starts with the beginning cash balance for the company. Let's type beginning cash balance as the first line item. For January 2023 in this worksheet, we know this amount already because it's the cash balance on the balance sheet as of December 2022. So for January, link it to the 2022 balance sheet cash and change the font to green since it's a link from a different worksheet. If you recall from our refresher on the cash flow statement, it is typically organized into 3 sections: cash flow from operating activities, cash flow from investing activities, and cash flow from financing activities. In the operating activities section, this is all the actual cash flow that came in or cash flow that left the company resulting from operating the company. This includes the sales of the services or products, the cost of goods sold, which is the cash outflow, and all the operating expenses. We know all of these items already for 2023. For the cash from sales, let's link it to the total revenue from the revenue projection worksheet and format them green. Same with cost of sales. Let's grab January's cost of sales or cost of goods sold from the worksheet we worked on before and format it green. Then let's link January's operating expenses from the operating expense projection worksheet that we built out already and also formatted green. After we list and link these items, we can total them up, so have a row called net cash flow from operating activities. Type equals F10 for the cash from sales, then minus cost of sales, and minus operating expenses. We can format it so that this row is bold because it's a total calculation row, and we can put a border with a line on the top and bottom of the row. And again, the shortcut key if you have Windows is Alt-HB-D for both top and bottom, or Alt-HB-P if you want to just do at the top. The next section to build out is the cash flow from investing activities. These basically are 2 kinds of cash flow. It's all the cash inflow and outflow related to investing into the growth of the company, and that includes any hard equipment and machinery and other companies that this company acquires. Let's label a row item for CapEx. This will include new fixed assets purchased, as well as what was sold for cash. One of the assumptions about fixed assets was that depreciation method is straight line for 5 years for the 3D printing machine that was purchased in the beginning of 2022. So we know that there are no additional fixed assets to be purchased during this year. Since there were no new fixed assets purchased, we can leave CapEx blank. The company also didn't make any investments into other businesses for cash, so there's nothing else that goes here. I have 3 rows here: CapEx purchased, CapEx sales proceeds, and acquisitions net of sales proceeds. Purchases and sales of securities like stock of other companies would also go here, but to keep things simple, we won't list them right now. And we know all 3 of these rows are 0, so let's just put 0 for all these rows, and since they are hard-coded inputs, let's turn them blue even though we can't really see it, and add a row at the bottom of this section called net cash flow from investing activities. Even though the result is going to be 0, we want to be careful of the sign conventions. In the total cell here, let's type equals minus CapEx purchased plus CapEx sales proceeds and minus acquisitions net of sales proceeds. And we can also format it bold and put a border at the top and bottom of the row. The third and final section of cash flow statement is cash flow from financing activities. This is related to raising money for the company, That includes raising debt or paying back interest or principal on the debt, as well as issuing new shares or buying back shares of the company from investors. And it also includes dividends paid out to the shareholders. We know that Jo has a $50,000 loan, but she got this last year in 2022, so we don't have to record anything in 2023 as cash inflow. And it will be paid back in 2024, so the cash outflow of the debt principal will be recorded in that year. But let's have rows for these even if the numbers are zero. Let's call it proceeds from debt and another one for repayment of debt. But what we do have in 2023 as cash flow are the interest payments on the loan. Under cash flow from financing activities, let's list loan interest payments. Let's find the January interest payments from the loan worksheet that we created earlier and link it and format it green. Next, we can also include dividends paid as a placeholder because although there's no mention of dividend payments in 2023, there were dividends paid previously if we look at the 2022 balance sheet. So we can list it here for now in case the projections change in the future or for future years there are dividends. For the combined row, let's call it net cash flow from financing activities. And for the cash inflow, they will be positive and cash outflow will be negative. So type equals plus proceeds from debt in January minus repayment of debt minus loan interest payments minus dividends paid. Now we've finished all three sections of the cash flow statement, so the final section is totaling it all up. Leave a blank row and in a new row, let's label it net increase or decrease in brackets in cash flow. This row will be calculated by adding up the net cash flow from operating activities plus net cash flow from investing activities plus net cash flow from financing activities. The final row in this section is the ending cash balance in that month. Let's label it and add up the beginning cash balance and the net increase or decrease in cash flow. And you did it! You created 95% of the first part of the three-statement model. The rest of the months is quite easy. The beginning cash balance in February is going to be the ending cash balance in January. So let's link the February beginning cash balance to the January ending cash balance. Cash from sales, cost of sales, and operating expenses are linked to the January amounts for these rows already. So we simply have to copy these cells and paste it all the way to December. Make sure that the cells were not locked to the January column so that when you copy and paste it to December, it's not locked to the January column from the respective worksheets. And don't forget about the total column. The beginning cash balance in the total column is going to be the January number, so don't add up all the columns for this one, but we can add up January to December for all the other rows in the total column below. And then for the ending cash balance, this is just going to be the December ending cash balance. And the last two tasks we have left are to build out the income statement and the balance sheet. Both of these tasks should be very easy because we did all the hard work already developing the numbers. All we have to do now is to link what we created in other worksheets. As mentioned before, as a financial modeler, we want to be as efficient and accurate as possible. We have an opportunity to do that right now, which is instead of creating the 2023 income statement from scratch, we can take the 2022 income statement because it's already formatted and labeled, and remove the 2022 numbers and start with the 2023 revenues. So let's do that. Go to the 2022 income statement tab, right-click on it, then click on Move or Copy. Make sure to check the box Create a Copy, and place it so that it comes after the cash flow statement, since that's the order of the worksheets we've been creating. Once we press OK, let's right-click on the tab name again, and rename it to whatever you want. I will be consistent with the naming convention of the worksheets here, and name it 3D4U 2023 Income Statement. And I'm going to change the tab color to be consistent as well. Now from the top left, let's rename and make the updates we need to for the 2023 income statement. The name of the worksheet and the name of the table updates to 2023. let's remove all the row item numbers that are hard-coded and leave the rows that have formulas or calculations. Going from top to bottom, remove the numbers for the regular 3D printing services and premium 3D printing services. Leave the total revenue since this calculation will be the same for the 2023 income statement. You can also leave the total column as well since the addition of January to December will be the same. Remove regular 3D printing services and premium 3D printing services. Leave cost of goods sold. Remove salaries, bonus and payroll benefits, advertising, rent, insurance, and other G&A. Leave total operating expenses. Leave operating income. Remove depreciation and loan interest payments. Leave total other expenses. And finally, leave net income calculation. Now let's go back to the top and start linking to the other worksheets. In January, under revenue for regular 3D printing services, let's type equals and go to the revenue projections worksheet and find the regular 3D printing services revenue and hit enter. Do the same for the premium 3D printing services revenue and hit enter. Format these two rows green since they are linked from a different worksheet. The total revenue should calculate on its own since we didn't get rid of this row. Do the same with the cost of goods sold or cost of sales, and grab the regular 3D printing services cost of goods sold and equal sign link to the premium 3D printing services cost of goods sold and hit enter. Make sure to format these two rows green as well. The total cost of goods sold should calculate on its own, and the gross profit should also calculate on its own from the revenue and cost of goods sold. Similarly, for operating expenses, start with salary, link each cell to the corresponding amount in the operating expenses worksheet. And after you link the salaries, if you ordered the expense items to match the order of the expense in the income statement, then you can just copy the salary cell in January and paste it to the rest of the operating expense line items. And the total operating expenses should calculate itself. The operating income is negative for January, but that's okay. It's because the company didn't have as much revenue in January compared to expenses, which could be due to seasonality, but we don't know that yet without an analysis. Now let's link depreciation from the loan and depreciation worksheet and also the loan interest payments. We've completed the January income statement, so now we can copy all the cells in January and paste it through to December. You have now completed putting together the income statement. The last task is to build out the balance sheet for 2023. Similar to the income statement, we'll take the 2022 balance sheet and copy it so that we don't have to recreate the whole structure from scratch. Right-click on the 2022 balance sheet tab and click on Move or Copy, then check the box Create a Copy, and let's place it right after the income statement and click OK. Then let's change the tab color to be consistent and rename it to 3D4U 2023 balance sheet. At the top of the worksheet, let's make changes so that 2022 is now 2023. Let's create another column beside the current 2022 numbers so we can fill that in, and we can leave the 2022 column as is. Click on the column letter to highlight the whole column, or if you have Windows, the keyboard shortcut is Control and Spacebar at the same time, and Control-C to copy. Go to the next column over and press Control Spacebar to highlight the whole column, and insert column by pressing Control-Shift and the plus sign at the same time. We inserted it before the column instead of just pasting it into the column because in case there's something in an existing column, we don't want to overwrite it. So it's a good habit to insert copied cells rather than overwrite it on top of the cells. In this new column, let's change the year 2022 to 2023. Cash is going to be the ending balance or December's cash balance in the cash flow statement that we built. So let's press equals, go to the cash flow statement, and find the December ending cash balance and hit enter. And make sure to change the color to green since it's linked from an external worksheet. Remember that the balance sheet items are not a flow of money, but how much of that amount existed at that date. So for inventory, since there was no change, it will remain the same as December 31st, 2022. So let's link this to the previous years of $75,000. And we can have the color here black since it's not hard-coded, so it's not blue, and it comes from within the same worksheet, so it's not green. Next, in 2023, there were no new fixed assets purchased or existing fixed assets disposed of. So the amount will still remain the same as last year's. Let's link it to the previous years. For the accumulated depreciation, we know that this amount changed over the last year. So let's add what was last year's accumulated depreciation balance and add from the depreciation calculation worksheet for this year's additional depreciation. And remember to grab the total for the year instead of just January's. As for the debt, the company isn't paying back the principal until 36 months later, so the debt outstanding is the same. Let's link it to the previous year's balance. The common stock is the same because Joe's company didn't issue any new shares or purchase any of the shares back. So let's link it to the previous year's balance. The retained earnings is how much the company has made in profit after paying for all their expenses from all the years since the company has been around. So this would be the total net income for the year. Link that from the income statement and add it to the previous year's balance since it's a cumulative since the company has been around. And remember to link the total and not just December's net income. There were no dividends paid out to Joe, so it will remain the same to the previous years. And if everything works, the balance sheet should balance such that the total assets is equal to the total liabilities and owner's equity. Congratulations, you have successfully built your own 3-statement financial model. The next step is now making projections to build a discounted cash flow model in order to value a company. Up until now, you went through the exercise of learning how to use Excel to build a simple version of a 3-statement model. We went through this step first before learning the discounted cash flow model to value a company because oftentimes you will have a company's 3-statement model already. That is, if it's a public company, you'll be able to grab the company's P&L, balance sheet, and cash flow statement for historical periods. Or if you're valuing a private company that is your own, or you're valuing another company for the owner, you'll have their P&L, balance sheet, and cash flow statement to work from. You need to know what each financial statement is for and how they work with each other in order to be able to grab the right information to build the discounted cash flow model to develop the valuation of a company. So now that you are familiar with the 3 financial statements and how they work together, you basically have the knowledge to grab whatever resources you need to value any company. We will now continue with the case study to build the discounted cash flow model. First, let's go over some new concepts for the DCF, and then I'll provide some more scenario assumption details to build out the DCF. For those who aren't familiar with the discounted cash flow model, what is it? Let's first understand the concept of the time value of money to describe what a discounted cash flow model is. A discounted cash flow model, or DCF for short, is when you project the cash flows on an annual basis out by at least 5 years and discount the cash flow back to today's value and sum up the potential cash flows that the company can earn in the future. This sum of the potential cash flows is considered the value of the company today because it is what you expect the company to make in the future in cash flows. For example, let's say you inherit $1 million and the trustee in charge of distributing the money to you says you have the option to take the $1 million in lump sum today or receive $100,000 every year for 10 years. Now, if you opt for the $100,000 every year, the $100,000 you get paid in 10 years will not be worth $100,000 at the time that you receive it because of inflation and the interest you could have earned. So hypothetically, next year you would get $106,000, the year after you might get $112,000, and in 10 years you would get $170,000. When you just add these numbers up, this equates to $1.5 million, which is more than the $1 million in dollar terms. But like I said, these amounts are not the same value today as they are in the future. because the $170,000 that you would receive in 10 years, which includes the inflation and interest, is actually worth $100,000 today if you discount it back. By discounting the cash flow back to today's value, what we mean is take that hypothetical interest and inflation that's compounded into that amount back to what it would be worth today. And when you sum today's value of those annual cash flows you'll receive in the future, then you have $1 million, which is the same as if you get a lump sum of $1 million today. And what we're doing here is essentially a discounted cash flow. What are all the things you need to calculate a DCF? You need the projected cash flow. We will go over how to obtain this, but essentially, we use a combination of historical financial statements and subjective judgment by the company's management, analysts who know the industry, and your own judgment from what you know to build out the cash flow. 2, we also need the working capital assumptions. Working capital is a projection of how much cash the company needs in order to maintain operations. It is calculated as current assets minus current liabilities, or more commonly, it's calculated as a percentage assumption of the change in revenue for the company. For example, if the company's revenue increases from $5 million this year to $6 million next year, the assumption is that you need cash to spend in order to be able to make the extra $1 million more in revenue next year compared to this year. There are several ways to calculate this, but we'll see it in action as the percentage of the change in revenue, which is the most commonly used assumption. You also need the discount rate. The discount rate, which in industry terms is called WACC, short for weighted average cost of capital, is what is used to equate the future value to today's present value terms. And we'll go over how to calculate the discount rate or grab the discount rate for the industry of the company that you're valuing. We also need an assumption for the long-term growth rate. This is usually like a 3% to reflect the long-term historical average inflation rate. We will need this to calculate the terminal value. Now, let's build our own DCF step by step. I like to teach this in 5 steps. The first step is the most involved and the hardest. The steps are: Step 1, use historical financial statements and assumptions to build a 5-year P&L projection up to net income. Step 2 is apply adjustments like depreciation, working capital, CapEx, purchase price, etc. to turn the 5-year net income projection to a 5-year cash flow projection. Step 3 is to develop the WACC or the discount rate. Step 4 is calculate the terminal value. Step 5 is apply the discount rate to the discrete cash flows and the terminal value and add them up to get you the present value of the company. Here are the new assumptions for the case study to build the DCF. Let's apply the 5 steps to the case study from where we left off with Joe's 3D4U Printing Services Company. The additional assumptions are as follows. If you recall, we were given the 1 year's worth of historical financial statements, and it is now the end of 2023, and the 2023 financial statements that we built in the case study is pretty accurate to actuals. So now we have 2 years worth of historical financial statements. Let's build a 5-year P&L projection starting from January 1st, 2024 for the next 5 years to the end of 2028. The revenue growth for the first 2 years will be similar to last year's growth, and then after that, the revenue growth will start to taper off down to a long-term growth rate of 3%. Gross profit margin will be the same. Operating expenses as a percentage of revenue will be the same for all the expense items except rent, which will grow from $10,000 a month to $15,000 a month. Remember that the principal payment for the loan will be paid off at the end of 2024. Joe will not be getting any more loans after that. Joe will buy new 3D printing machines as follows: another $30,000 machine at the beginning of 2024, $50,000 machine at the beginning of 2026, and a $50,000 machine at the beginning of 2028. Depreciation for these additional printing machines will also be straight line for 5 years. Working capital as a percent of change in revenue is assumed to be 5%. From year 3 onwards, the company will start paying taxes of 20% on earnings before tax. Joe recently went to an investment banker and asked how much she could get from investors if she sold a portion of the company. The investment banker advised that the company is currently too small for there to be an appetite by investors to purchase shares, but that in a similar industry, investors expect to get an annual dividend rate of 10% per year if they did invest in a similar company. Those are all the assumptions that you need to build the DCF for this case study. Let's start with step 1, build a 5-year P&L projection to net income. Let's start by setting up the worksheet as we have done before. I'm going to start with the formatting that I always do when I start a new tab, which is to have a narrow column to the left and a narrow row at the top so that I can give the worksheet a little room to breathe in the margins. Then I will put the name of the company I am valuing at the top left and put the name of this worksheet below that. I'll leave a blank row and then start with the name of the model I am going to start building, which is the discounted cash flow, and a $sign in brackets. Most of the rows are going to have the unit dollar sign, so I will put that here in the brackets. The first column of the model is going to be the name of the line items. The second column will be used for indented subheadings of the line items. The third column will be for assumptions. The fourth column I will leave blank as a narrow gap between the labels and the numbers. And then column F is where I will start the years. The DCF will start from the beginning of 2024 as stated in the assumptions, and we will have a projection for 5 years. So let's put 2024 E in column F's header. E stands for estimated, which is always good to denote when making a projection for clarification that they're not actuals. Then 2025E, 2026E, 2027E, and 2028E. We can also format these cells so that we're only entering the numbers and it shows an E at the end. Let's format so that they align in the middle of the columns. I will bold the header and put a thick line at the bottom, which is Alt-HBH in keyboard shortcuts on your Windows. This step 1 is to create a net income projection for the next 5 years, so it will look very much like the income statement that we already developed, except we will be projecting it on an annual basis, and we will be bringing in assumptions to project it for 5 years. But to know the line items that will go here from revenues to the income, let's go to the 2023 income statement that we created and copy and paste the line items on the left. Now, once we have all the line items copied and pasted here in the DCF model, we start with the revenue. We projected the regular and premium revenues. The assumption that is given about revenues is that the revenue growth for the first 2 years will be similar to last year's growth, and then after that, the revenue growth will start to taper off down to a long-term growth rate of 3%. This means we need to know what the revenue growth was last year, and we also need to know what the revenue was last year so we can grow it to find the 2024 revenue projection. So at this point, I'm going to add 2 more columns to the left of 2024 for the last 2 years' historical revenue numbers that we're going to need here. Let's go to any cell in column F, press Ctrl and spacebar at the same time to highlight the whole column, then press Ctrl C to copy this column, and then press Ctrl Shift and the plus sign on your keyboard to insert the copied cells before the highlighted column. Immediately after we do that, press Ctrl C again to copy the whole column again, and then repeat the same step with Ctrl Shift and the plus sign to insert the copied column once more. Let's change the years of these 2 columns to 2022A, where A stands for actuals, and 2023A. Let's link the revenue for the regular and premium 3D printing services from our 2022 and 2023 income statements. In cell F8, type equals, and then navigate to the 2022 income statement, go to the total column, and find the regular 3D printing service total revenue and hit enter. Copy this cell and paste it below for the premium revenue. And similarly in the 2023 column, type equals, and let's navigate to the 2023 income statement and find the total column, regular 3D printing services revenue, and hit enter. Again, copy this cell and paste it below for the premium revenue as well. Let's highlight these cells and format it so that we have a comma after 3 digits. Let's change the color to green since they are linked from another worksheet. Let's calculate the sum of these two revenue rows for each year in the total revenue row. Copy one of the cells with the sum formula and paste it for the rest of the years. And we can bold it and put a border on the top. Now, to determine the revenue growth rate projections, we have to know what the historical revenue growth was. What we're going to do is to add rows between the total revenue and the cost of goods sold that's about to come later, and calculate the revenue growth for the regular, premium, and the total revenue, so that we can use this analysis to project the revenue growth. Anywhere in row 12, let's press Shift and the spacebar at the same time to highlight the whole row, and press Ctrl, Shift, and the plus sign on your keyboard. And let's press Ctrl, Shift, and the plus sign again 4 more times, so we insert 5 rows altogether. Then below total revenue, let's leave a blank row, and in the next row, type revenue growth percentage. And below that, let's put regular 3D revenue growth, and then premium 3D revenue growth, and then after that, total revenue growth. I'm going to unbold these rows. In the 2022 column, we don't have the 2021 numbers, so we can't find the revenue growth here. So let's leave that blank. And starting from 2023, for regular, let's type equals, then navigate to the 2023 regular revenue, then divided by, and then navigate to the 2022 regular revenue, and -1, and hit enter. It will probably give you a decimal place, so let's turn that into a percentage by clicking on the percentage symbol under the home ribbon in the number format section, or you can use the keyboard shortcut Ctrl, Shift, and the percentage sign, which is number 5. Get rid of any decimal places if it shows up, and I will copy and paste this to the rest of the regular revenue growth row, and to the premium revenue growth row, and the total revenue growth row as well. Now, if you recall from the beginning of this course, we learned a trick for when we see cell errors like the div 0, which is that you can't divide by 0. We do know that the numbers here are going to come later, and so it's not really an error, but we don't really want to see that. So what we'll do is go back to the first cell in the section that we just calculated, and type if error and the open bracket before the formula that we just typed. Then at the end of the formula, let's type comma and 0, close the bracket, and hit enter. Then let's copy this cell and paste it again. As preference, I don't like seeing the number 0. I'd rather see a dashed line in place of 0. So we're going to highlight this whole section with the percentages. Then if you have Windows, the keyboard shortcut is Ctrl-1 to open the number format prompt. Or you can right-click and select Format Cells. Select Custom, scroll and see if there's any preset format for percentages with a dashed line if it's 0. And remember that the first section is for positive number, then a semicolon. The second section is for negative number format, semicolon, and then the third section is for 0. And I see that there isn't, so let's create our own by typing the number sign, 0.0 percentage, underscore, and close bracket, then semicolon, and for the negative number, I will put the open bracket, number sign 0.0 percentage, and close bracket, then semicolon, and for a dashed line in place of 0, I'll put quotes, dash quotes, and underscore, and close bracket. Now I'm going to highlight this whole revenue growth section, including the line item names, unbold them if some of it is bolded, and change the font color to dark gray and italicize it. This is just preference, but if you recall, I like doing this to break up the sections from just a sea of black numbers so that your eyes can clearly jump from one place to another in the model for what you're looking for. Now that we can see what the revenue growth was from 2022 to 2023, we can use this look-back analysis to make our projections. The assumption set that the revenue growth for the first 2 years will be similar to last year's growth. So we will need a few more rows to help us achieve this. Let's add some rows above the regular 3D revenue row. Again, to do that, we can go anywhere in row 8, press Shift and the spacebar at the same time, and press Ctrl, Shift, and the plus sign. Type regular 3D year-over-year growth assumption for one of them, and premium 3D year-over-year growth assumption for the other row. In 2024, let's put 10%. Let's highlight these cells that will have the percentage hard-coded inputs and change the color to blue. We also know from the assumption that by the 5th year, which is 2028, the growth rate will reach 3% for both regular and premium. So let's put 3% for 2028. And how we taper down percent down to 3% will be strictly based on our analyst's judgment. We can either make them decline in equal amounts every year, or we can have a slower decline earlier. For regular, I will put 8% in 2026 and 5% in 2027. And then for premium, I'll put 10% in 2026 and 7% in 2027. Now back to the revenue. For regular services in 2024, let's type equals previous year's revenue times open bracket 1 plus the 2024 growth assumption for regular, close bracket, and hit enter. Let's copy this cell and paste it to the rest of the blank regular and premium revenue cells. Since we didn't lock any columns or rows, they should be referencing the correct assumptions. You can press the F2 key on your keyboard in random cells here to check that the reference is correct. And if you haven't done so already, you can total the revenues and copy and paste it across the years. Next, for the cost of goods sold, the assumption we're given related to this is that the gross profit margin will be the same as the previous years. The gross profit margin is simply the opposite of the cost of goods sold. Let's do something similar to what we did in 2022 and 2023 actuals for revenue. For 2022 regular cost of goods sold, let's type equals and link it to the 2022 income statement, cost of goods sold. Copy and paste that to the premium, since they're both right after each other in the rows. I'm going to copy the green format that we used for the revenue from above and paste it to the cost of goods sold. We can do Ctrl C and then press down on Ctrl Shift and V to paste special, and then type T and hit enter. Then we will see just the same green format. Let's do the same and link the 2023 cost of goods sold to what's in the 2023 income statement. Similar to what we did for the revenue growth, we're going to have the gray italicized percentages below, but in this section, we're going to say cost of goods sold as a percentage of revenue for regular and premium. The formulas will be different, but we want the same format, so let's copy this whole revenue growth rows, including the blank row. And we will insert the copied cells between the cost of goods sold section and the gross profit. And change the labels to cost of goods sold as a percentage of revenue. Let's update the formulas to be equals cost of goods sold in that year divided by the corresponding revenue. We won't lock any columns or rows again because the rows should divide by the respective rows and need to be carried forward. And we can leave the if error that's already in the formula. Let's copy the cell and paste it to all the cells in this section. We can include 2022A as well since it is not a year-over-year growth. In this section, by taking the COGS and dividing it by the respective revenue, we get 41% for regular and 33% for premium. In the assumption column, put 41% for the regular services cost of goods sold and 33% for the premium services cost of goods sold. Let's turn these blue. And I'm going to highlight the whole column and click on the center align under the home ribbon, or the keyboard shortcut is Alt-H-A-C, and turn the whole column blue. In the 2024 column, for regular cost of goods sold, let's type equals and then navigate to the 41% assumption. Lock just the column by pressing the F4 key 3 times on your keyboard, and then multiply by the regular 3D revenue and hit enter. Adjust the formatting as needed. Copy this cell and paste it to the rest of the years for both regular and premium. Choose random cells that we just pasted and press the F2 key on your keyboard to make sure the reference cells are correct. We can also grab the total revenue cell for 2022 and paste it into the total cost of goods sold row for all the years. This will copy the formula that sums the above two cells and also copy the formatting. Again, press random cells. We paste it now by pressing the F2 key to check that the formula is correct. If we did this correct, then the gross profit margin should be the same in all the projected years, just like the assumption told us. So for 2022 gross profit, type equals total revenue minus total cost of goods sold and hit enter. Copy either the total revenue or the total cost of goods sold cell from above and go back to the gross profit cell. And let's copy the format by pressing Ctrl-Shift-V to paste special, and then type T on your keyboard for formatting and hit enter. And then copy the gross profit cell and paste it across the years. Let's copy the total cost of goods sold as a percentage of revenue row and insert the copied cell below gross profit and update the label to gross profit margin percentage and then update the formula to gross profit above divided by total revenue. Here I'm going to lock the revenue row by pressing the F4 key twice. This is going to come in handy because when we're calculating various margins later, we can just copy and paste this row and the revenue row will be locked. Now notice that the gross profit margin changes slightly. If you look closely, the gross profit margin for each type of services stays the same, but the total changes slightly because the mix of the types of services changes. For the operating expenses, let's do the same for 2022 and 2023 actuals, where we link them to the actuals from the income statements. Starting with salaries, type equals, go to the 2022 income statement tab, find the total salaries and hit enter. Copy and paste the cell down to other G&A since the order of the expenses are the same on this worksheet and the income statement worksheet. And do the same for 2023, where we start with salaries by typing equals and going to the 2023 income statement and linking it to the total salaries and hit enter. Then copy and paste it down to other G&A. Now copy the green formatting from above and paste it here by pressing Ctrl-Shift-V and type T and hit enter. For 2024 onwards, we need to calculate them with the assumptions. From the 2023 operating expenses tab that we calculated, let's copy the blue assumptions and paste them here in the assumptions column. As the assumptions told us, everything is going to stay the same except rent will be $15,000 a month. So let's leave everything and update the $10,000 rent to $15,000 in the assumptions column. For the salaries, let's type equals, highlight the 12% assumption, press the F4 key on your keyboard 3 times to lock the column, multiplied by the total revenue, and let's lock the row of the revenue by pressing the F4 key twice, hit enter, and adjust the format as necessary. Copy this cell and paste it to all the cells except rent. And finally, for the rent row in 2024, let's type equals, highlight the 15,000 cell, press the F4 key 3 times to lock the column, and multiply by 12. Copy this cell and paste it to the rest of the years. Sometimes when you have a formula that breaks the pattern of the formulas in the adjacent cells, it'll show a little green triangle in the top left. That's just a nice alert for you to check the formulas. If you check that it's not an error, then highlight those cells with the green triangles, and then a yellow triangle with the caution will appear. Click on that and then click on Ignore Error. Now let's find the total operating expenses by summing all the cells above. We can type equals sum, open bracket, and highlight all the cells above and hit enter. Or we can use an even faster shortcut by typing Alt and the equal sign on the keyboard at the same time. I'm going to copy the gross profit cell and paste special to copy just the format. And once the format has updated, I'm going to copy the cell and paste it to the rest of the years. Now the operating income is going to be equals the gross profit minus total operating expenses. And I'm going to copy the format again by copying the row with the format that we want, and then paste special with Ctrl-Shift-V, press T and hit enter. and copy this cell and paste it to the rest of the years. Next, I want to know what the operating income margin is, so I'm going to highlight the entire row for the gross profit margin and insert copied cells right after the operating income row by highlighting the whole row right after the operating income and pressing Ctrl-Shift and the plus sign on the keyboard. Update the label to operating income margin. Press F2 in the cells to make sure the formula is correct. The remaining rows we have left are depreciation and the loan interest payment, and we have to add one more row per the assumptions, which is taxes. Let's tackle the easier one first. For 2022 and 2023 actuals, let's link them to the loan interest payments and the depreciation from the respective income statements. Copy and paste special the green format from above. For the loan interest payments in 2024, we know that the interest payments will be the same because it's 8% of $50,000 per year for 3 years, starting in 2022. And there won't be any more loans after it's paid back in 2024. So let's put 8% times 50,000, which is 4,000 in the assumption column for the loan interest payments. Adjust the format as needed. And for 2024, let's type equals and link it to the 4,000. And we can leave the rest of the years blank or put 0 and format it to a dashed line. For depreciation, we have a bit of work to do to calculate it because the assumption tells us that Joe's going to buy 3 new 3D printing machines in the future. Let's calculate the depreciation waterfall below the DCF model. Leave a few rows and type depreciation waterfall calculation. And if you haven't done so already, I'm going to freeze the panes to show the years at the top and the labels on the left, since we're working at the bottom here. Continuing with the depreciation waterfall calculation, I'm going to start it from the previous bought machine because we have some depreciation left on that. Below the depreciation header, let's type the years from 2022, which is the first year Joe bought a printing machine, and below that type equals, and then the above cell plus 1, and paste it down to the year 2028. Adjust the formatting as needed, and in the assumption column, at the top, let's put purchased in black, and then below that in the years, let's put what the amount of the machine purchased was, or will be purchased. So in 2022, let's put $30,000. The assumptions tell us that the company will buy another $30,000 machine at the beginning of 2024, $50,000 in 2026, and $50,000 in 2028. So let's put these in the assumption column beside the corresponding year. Make formatting adjustments as necessary. Then we will also put the years from 2022 to 2028 from the left to the right as a header for the depreciation waterfall calculation. And starting in the year that the machine was purchased, for each one, we're going to depreciate each machine for 5 years. So let's type years depreciated in one of the rows, and in the assumption column, put 5 years. So for the machine bought in 2022, let's type equals, and then navigate to the amount of the machine bought. Press the F4 key 3 times to lock the column, and divide it by, and the cell with the assumption 5 years, and also press the F4 key once to lock both the column and the row for that. Let's copy and paste this formula for 5 years. We'll do a similar calculation for the machine bought in 2024. In the 2024 column and row, type equals, highlight the machine amount in the assumption column, press the F4 key 3 times to lock the column, and divide it by the cell with the 5 years assumption, lock that with the F4 key, and then copy and paste for 5 years. Or we can just copy the formula from the 2022 row and paste it to the 2024 row for 5 years because we locked the column for the assumption and we locked the column and row for the 5 years, so everything should work. So let's do the same for the machine bought in 2026, where we'll copy the formula from above and paste it for 2026 to 2028. And then we'll do the same for the 2028 machine, but only paste it for 2028. Since we don't have 5 years to paste, it'll only show up 3 times for 2026 and only once for 2028, but that's okay. We don't need to model beyond 2028 at this point. Then at the bottom of the table, let's add a total row and sum the depreciation for each column. We'll call it total depreciation and sum all the years of depreciation in that column. Copy the cell and paste it to 2028. And we can bold the row and add some borders for the total row and a border around the entire depreciation waterfall calculation, since it doesn't flow from the DCF model and is a side calculation. Now we have the depreciation, so let's go back to the DCF model above. For 2024 depreciation, type equals and link it to the total depreciation for 2024 in the depreciation waterfall calculation table. Copy and paste this formula to 2028. Then add up the total other expenses, and we can copy the format from one of the total rows from above again. Before we find the net income, let's not forget the new assumption, which is taxes. For taxes, we need to add some rows between total other expenses and net income. Let's add a row to calculate the earnings before taxes, or EBT. Let's do this by going to any of the rows between total other expenses and net income. Press Shift spacebar at the same time on your keyboard to highlight the whole row, and press Ctrl Shift and the plus sign on your keyboard to add a few more rows. In 2022, let's type equals operating income minus total other expenses. Copy and paste the formula to 2028. And we will copy the total format again here. And below that, let's put a row for taxes. The assumption given is that from year 3 onwards of the 5-year model, tax will be 20% on earnings before tax. So put 20% in the assumption column in blue, and starting in 2026, which is year 3, type equals the earnings before taxes above times highlight the 20% tax rate on the left, and press the F4 key 3 times to lock the column only, and hit enter. Copy and paste to the rest of the years. And finally, net income will be equals earnings before taxes minus taxes, hit enter, and copy and paste the formula to the rest of the years. And let's put a border on the top and the bottom of net income. And finally, below the net income row, let's put the net income margin. We can copy and paste one of the margin rows from above, and the formula should update to the right reference automatically. To do that, remember, we can go to the operating income margin row, press Shift and the spacebar to highlight the whole row, press Ctrl-C to copy, then go down to the row just beneath the net income row, press Shift spacebar to highlight that row, and then press Ctrl, Shift, and the plus sign to insert the copied cells. Update the label here to net income margin, and you can go to any of the cells and press the F2 key on your keyboard to make sure the formulas are updated to the right reference. Now we are finally finished step 1, which is to build a 5-year projected P&L to net income. This was the hardest and the longest part. The rest of the steps will take less time, but there will be some new concepts. Let's go to step 2. Step 2 is to apply cash and non-cash adjustments to turn the 5-year net income projection into a 5-year cash flow projection. First, let's add a bunch of new rows between the P&L we just calculated and the depreciation waterfall that we have below. Let's write cash flow adjustments, and below that, these are the items we need to adjust. First, we're going to add back the depreciation. Net income takes out depreciation, but depreciation is a non-cash row, so we're going to add that back. And since 2022 and 2023 are actuals, we're going to just do the calculation for the cash flow for the forecast period only. So from 2024, let's type equals, go to the depreciation row, and hit enter, and copy and paste it to the rest of the years. One thing I want to point out here is that some models show all numbers as positive, and in the total calculation, they're either added or subtracted, just like it is here. And some other models show all the expenses and cash outflows as a minus on the P&L, and the total rows add all of the above. So this is just a preference thing. For me, I prefer to show all positive and add or subtract as necessary in the totals. But if you do it this way, I find it very convenient when we're doing the cash flow adjustments to call out explicitly if we're adding back or deducting the adjustment rows. And that's why I am writing here add : depreciation. The next row is going to be capital expenditures or CapEx. This is because we're adding back the depreciation, which was a smoothed out cost of the machines that are being purchased. But in reality, Jo bought the printing machines as a lump sum in cash in the year that she purchased them. So we're replacing the depreciation with the CapEx, which is an actual cash outflow. So type less : CapEx. CapEx is going to be the 3D printing machines purchased. Since we have more than one, we can't fit them all in the assumption column, so we will put them in blue in the years that the machines were actually purchased in the same row. And again, let's ignore 2022 and 2023 actuals and start from the 2024 forecast period. So let's put 30,000 in 2024, 50,000 in 2026, and 50,000 in 2028. The next adjustment is to include working capital. If the revenue is increasing from one year to the next year, the working capital will be a decrease in cash flow. The assumption that was given is that working capital as a percentage of change in revenue is 5%. So let's type less : working capital and put 5% for the assumption. In 2024, type equals, open bracket, this year's revenue minus last year's revenue, close bracket, times 5% cell, and press the F4 key 3 times to lock the column for the 5% assumption, and copy and paste it to the rest of the forecast period. The next adjustment is to reduce the cash flow from any debt that you repaid or add any debt that you received in new financing. It could add or reduce the cash flow, so in this case, we can label it add/less debt. But Jo is not planning to get any new loans anyway, so this row will just stay blank. Now we're done with the cash flow adjustments. Let's have a blank row below these and type net cash flow in the row below. In 2024, let's type equals net income plus the depreciation minus the CapEx minus the working capital and plus the debt row, even though it's 0, and hit enter and copy and paste it to the rest of the forecast period, and format it the same as above. And we can also add the net cash flow as a percentage of revenue below. And finally, let's add a row below that to find the cumulative cash flow. In 2024, let's type equals the net cash flow in that year plus the cell on the left, which would be the previous year's cumulative cash flow, and hit enter. Copy and paste that all the way to the rest of the years and format like the above. Now you're done with step 2, which is to create the cash flow projection. Step 3 is to develop the discount rate that we're going to use to turn the cash flows into today's present value. In other words, we're going to discount the cash flows. You can either calculate the weighted average cost of capital, which for short is WACC, or you can look up a similar company or similar industry's discount rate as a proxy. Let's do a calculation of our own discount rate using the WACC method. This is a combination of the company's borrowing rate and the cost in percentage of how much they have to pay their investors. A simple example is, let's say a company has borrowed $10 million at 8% interest rate, and the same company has to pay the investors a 5% dividend rate. The cost of capital is a combination of the cost of borrowing and the cost of equity. So the cost of borrowing is 8% and the cost of equity is 5%. We can find the weighted average by taking the market value of how much was borrowed and how much belonged to investors and their respective cost rates. So the calculation would be 10 million divided by 60 million in total times the 8% plus 50 million divided by 60 million times 5%. And that gets us the weighted average cost of capital of 5.5%. Another way to calculate it is using something called the CAPM approach, but it is more complex than we need for a DCF model. And perhaps in the future, I'll make a lesson on examples of calculating discount rates for various companies, but for now, let's just either stick to the WACC or using a proxy. So for Jo's company, to calculate the WACC, The borrowing rate is the interest rate that Joe got on the previous loan, since she won't be getting any more loans in the future. The interest on that was 8%. Joe doesn't pay herself dividends on a recurring basis as she is the only investor, but there was an assumption given in the question where she recently went to an investment banker and asked how much she would get from investors if she sold a portion of the company. And the investment bankers advised that the company is currently too small for there to be an appetite by investors to purchase shares, but that in a similar industry, investors expect to get an annual dividend rate of 10% per year if they did invest. Now, a shortcut here is just to use a 50-50 average rather than a weighted average because we just want a close proximity average. That means if we average the 8% interest rate and the 10% dividend rate, the cost of capital is 9%. Let's do one more check to make sure that we're in the right ballpark with the 9% discount rate. We'll do that by looking up a proxy. Looking up a proxy rate is basically looking up the best cost of capital to use for the industry that your company is in or for other similar companies. One place that I used to use a lot in my workplace, and I recommend others to use, is Professor Damodaran's NYU Stern webpage. He calculates and provides the cost of capital by industry and updates them on a regular basis. You can Google Professor Damodaran NYU discount rate, or I will put the link in the downloadable Excel file. When you go to that page, you can go to the discount rate estimation and cost of capital by industry sector. On the left, you can see all the industries, and on the right, you see the corresponding cost of capital. The middle part shows the components that make up the cost of capital. For 3D printing services, it's a very niche industry, so we'll have to use a few industries that are kind of comparable to use for our case. Let's assume that Joe's 3D printing services make household products as well as bespoke plastic containers. For household products, the cost of capital is 9.89%, and for packaging and containers, the cost of capital is 7.25%. The average of the two is 8.6%, and earlier we calculated around 9%, so the proxy confirms that we should use 9% as the discount rate. Remember that the higher the discount rate, the lower the value of the company will be. So if you want to be more conservative, you can actually add a couple of percentages for premiums and use a higher discount rate. It really depends on if you're on the buy side or the sell side representing the value of the company. But one thing that you should always note is that you need to have backup for your assumptions. So if you're going to use 9% or 11%, you need to have justification for all of those assumption inputs. Otherwise, other people will poke holes and ask why you used certain numbers. And now that we determined what discount rate to use, let's put 9% as the discount rate in the DCF model, which we will use to calculate the next step. Step 4 is to calculate the terminal value. A terminal value is a one-step calculation that accounts for all the cash flows that the company expects to receive forever beyond the 5 years that we projected. The formula to calculate it is to take the last year's cash flow that we did project, multiply that by 1 plus the long-term growth rate, and divide all of that by the discount rate minus the long-term growth rate. For the long-term growth rate, we usually use 3% because that's the average level of inflation over a long historical time frame when we look back. So in the DCF model, below the discount rate, I'm going to type long-term growth rate and put 3% in the assumption column. Then in the next row, I'll put terminal value and go to the last column in year 5. This is where we'll calculate it. Let's type equals, reference the net cash flow in year 5, not the cumulative, but the annual net cash flow. Then multiply it by, open bracket, 1 plus the discount rate, close bracket, divided by, open bracket, discount rate minus the long-term growth rate, close bracket, and hit enter. As you can see, the terminal value is a lot larger than the annual cash flows that we calculated above in the first 5 years, and that's typical since the terminal value sums up all of the cash flows from years 6 to forever. And finally, in the final step, step 5, let's put everything together. We're going to apply the discount to all the cash flows and add up the discounted cash flows to find the value of the company. First, let's determine the period discounting in each year. This is the exponent of the formula we're going to calculate. Year 2024 is the first year and we'll be discounting back by 1 year, so let's put 1. Then the years after that, we'll put 1 year added on, so let's type equals previous year plus 1. Copy and paste it to the end of the 5 years. One technical thing to note here is that by putting 1 in the first year, we're assuming that the cash flows are received by the company at the end of the year. If, for instance, the timing convention is we want to average the year and assume that all of the cash flows are received in the middle of the year on average, then we would put 0.5 in the first year as opposed to 1. And the same would be applied for the rest of the years, where we would just add 1 to the previous years. So in this case, we are actually assuming that the cash flows are received at the end of the year. Now, the formula for the present value factor is equals 1 divided by, open bracket, 1 plus discount rate, lock with the F4 key, close bracket, and the hat symbol, which is the exponent, to the power of, and link that to the period discounting. Copy and paste that to the end of the 5 years. I will format it to only show 2 decimal places. Now let's calculate what the discounted cash flows are for each year's cash flow. In the next row, type discounted cash flow. One row after that will be for the years 1 to 5, or in other words, the discrete cash flows, and the next one will be for the terminal value. For years 1 to 5, starting in year 2024, type equals, find the net cash flow, times the present value factor. Copy and paste it to year 5. And in the next row, for the terminal value, we will do the same, which is equals terminal value times the present value factor for year 5. Finally, let's calculate the sum of the discounted cash flows. Let's type present value of cash flows or sum of discounted cash flows, and in the subcategory for the first row, type years 1 to 5 and sum up the years 1 to 5 discounted cash flows above. In the next row, let's link it to the terminal value so we can see it all in one place. And then the next row is going to be the total of the two. And that is it. Congratulations. You just created a discounted cash flow model and calculated the value of the company. In another video in the next part of the series, we'll take this DCF model and build a summary dashboard and a sensitivity analysis with some of the key assumptions. And we'll learn how to test and question some of the assumptions to see if it makes sense. Finally, we'll learn how to build a PowerPoint deliverable from the financial model. So stay tuned for part 2, and I hope you found this course helpful.